How about now, guys? Can you guys hear me now? Let me know if you guys hear me. I'm still waiting to know if you guys can hear me or not. Okay, great. Great. Okay, outstanding. Yeah, sorry about that, guys. I had no idea you guys couldn't hear me. Next time I'll be sure to do a sound check. Sorry about that. So what we're going over right now is I'm going to talk about some charts first, just regular macro stuff. Just get that out of the way. And in the meantime, while I'm doing that, talking to you guys about this stuff, which is back of the napkin for me, I will be finishing up the charts. If you guys have any general questions about anything you see, let me know. We can treat this however you guys want. You guys know I'm here for you guys. So basically, like I've been saying the whole time, since February, be careful because Bitcoin is just not looking right. And while it's kept on trending higher, just because you're buying now doesn't mean you're going to be good. So it's one thing to buy, and let me take it off a log, right? Just because it looks a little scarier like this. Shout out to everybody. I'm just talking right now. I'm not doing anything crazy, nothing formal. Shout out to Luke Billy. I don't know what it is about my voice, but people have this thing with my voice. I have no idea. I sound like anybody else, so I don't know. But okay. But just look at this chart, right? This right now is it's a linear graph. So you're not really seeing the price changes in a logarithmic manner. So this is what it looks like in a normal sense, right? Now, if you were looking at this, I'm pretty sure you would not be so hype into buying this at this point in time. Because let me tell you, this chart looks fugly. Now, am I saying Bitcoin is going to have this 80% drop now? Probably not. It's probably going to have some type of move into a retest area. Maybe we come back, retest this area. Maybe not. Maybe it's just a head fake before the real move higher than 100,000 plus. I mean, who knows? It's hard to tell, man. It's hard to tell. But one thing's for sure, two things for certain. Now is not the time to be buying Bitcoin. It's just not. It hasn't been. I mean, if you were buying back in February when you were first warned, I mean, you've been just dealing with chop the whole time. You haven't been making any money. I think the day I streamed and said that with Axis and a few other folks was probably around Valentine's Day. I can't remember, but it was around then. And you basically made no money, man, because you're just chopping sideways. This is going nowhere, and you're not even getting paid, right? Like, there's just no added benefit to just having capital sitting there. I mean, that's opportunity cost. And if you had a bunch of people selling their hex to buy anything else that was going up a couple months ago. And if you look at Hex from then to now, and I'm looking at the V2 chart, and what is this? This is a daily chart, so let's pull up the daily chart. I mean, yeah, from then to now, right? Like Hex is up. Like this is around the same time frame. So let's just call it 0.9%. One of my special guests have arrived. Bala, what's up, homie?
Hey, permission to come aboard? Oh wait, that's wrong show.
I'm already on, brother. I'm already on. So don't worry about it. All good. Oh yeah, I can't wait to talk about the chain. Oh, that new chain is gonna be off the chain. People just, it's crazy. I'm gonna put you guys on to a little bit of what you might not know.
You got some details to share, have you?
Yeah. But Richard put out some. So somebody asked a question in the chat, and Richard answered, and I tweeted it, and it's great information because it confirms what I've been saying from day one. It's just a replication of what we already own, right?
Yeah.
When a chain gets forked, what you're getting originally is just what was already in existence.
Right.
So, you know, it's not going to be like people are going to be suffering or whatever it is that they're thinking. Like, I don't know.
Worried out there, but I don't think there's any reason to. You know, obviously.
Yeah, exactly. There's zero reason to. I mean, I haven't heard a single person complain about, you know, receiving an airdrop of BC, you know,
Tell me your stat.
or any other Bitcoin fork, right? I haven't heard any of those people complain.
And how many have there been? Like Stellar, Gcash. I mean, hundreds.
They've had exactly
Bitcoin Gold. You know.
Yeah. I don't know. I lost count, to be honest, because there's been so many. Right? There's been so many. There's been so many.
Hey, how's my mic, by the way? How's the sound coming through? All right.
It sounds like you're in an echoey room. So I'm not sure if you're like in an empty vessel or on a yacht, because I know how you roll. Hard to tell with Bala G. He's always moving. So.
How's by the way? How's the Big Apple? Is it still rocking to the core?
Yeah. You know, the folks are out here playing their games like always. You know, they have nothing better to do. They'll get right soon enough, though. Things are changing. You know, so they're changing in the background, right? And that's the way we like it, because it's all about giving people rope, right? Like I was in the chat, I think it was yesterday, and in the Telegram chat, and some guy was in there just randomly asking questions, and people were presuming this guy was a scammer of some sort, and they were right, because he eventually just went away. But what I did was I let the guy just, you know, make him, because he was the center of attention for a little while, right? So then people started asking me questions, and then, you know, he kept trying to interject himself. So I let him give himself rope by just letting him ask all the questions that he wanted, right? Because nobody else was talking. He had to talk about one thing and one thing only, and that one thing is Hex. So, you know, it was literally on him to either...
Wait, this is on Telegram?
Yeah, on the Telegram chat. Yeah, the Telegram chat. Yeah, Telegram isn't secure. You know, it's not a secure environment.
On there, it's like, you know, fuck that shit.
Yeah, it's a place where you have to know what you're doing.
Yeah. Not the dark web, but it kind of is like that kind of ish, you know, because it's not Twitter. It's like, okay, it's a bit like $1 billion company. There's some sort of like you know, way to, like, you know, protect yourself, right? You know.
Right.
But Telegram, isn't that Russian or something? You know.
I don't actually know. I don't think so. I think they're American. I think they're headquartered out of San Fran. But I'm not sure, man. I don't keep up with that shit anymore, brother. Like, you know, who cares?
This is the company that tried to do their own token, man, but the TON token. So.
Oh, you're right.
Like a massive token, like. Whew, like,
I forgot about that.
Yeah, I think they are Russian, dude.
They might be. I don't know. I mean, just because they're headquartered out of San Fran doesn't mean that Russian people don't own them. I'm just saying, I don't know. I just think they're headquartered out of San Fran. Yeah, but they could easily be, right? Like, who knows? Yeah. I mean, this is the thing about these tech companies, man. People have to just be very wary, because you just don't know who you're dealing with. You really don't, you know? So it's always important to remember that. Very easy to get carried away with craziness.
So Andrew Yang, isn't he trying to be like the New York governor or something, or what's he trying to do?
Andrew, what do you mean?
Andrew Yang, that guy.
He was trying to be mayor or something. Yeah, that's not gonna fly, brother. Come on. New York, as lefty as it is, it's not commie, and he's a commie, so that shit's never gonna happen.
It's not gonna be New Yang City.
Yeah, he's over here talking about giving money away. People in New York aren't with that, so good luck to him with that.
More people in New York still. They're leaving, but they still got some left, I reckon.
Yeah, they're leaving for sure. They're leaving with a passion. So good luck to him, and pretty much all politicians, because they're gonna need it.
Yeah. What's happening? A little side diversion, like New York real estate. Is that are people like nibbling, or are they like trying to get some deals like on apartments, or are they like fuck this, let's get out of it?
Most people are really leaving, brother. There's just not a positive business environment in New York right now.
Sure,
You know,
sure.
you have people.
Same here.
Yeah,
But here, property prices are rising. You know, not going down; they're going up.
I mean, you got to understand why that's happening, right? That's because these people are debasing the currency,
Of course, yeah.
right?
It's
Like that.
not rising, but you know what I mean.
Yeah, I mean that's the thing, right? Like that's the hard thing, right? Like that's how they trick people into believing what they're doing is good,
Yeah.
right? Because they end up believing that the number going up in that sense is actually good, but what they
Right.
don't know is that they're actually having to pay more for their next house because
Yeah.
what if they don't stay in that one, right? They're gonna sell that house for X dollars and then that's it. When they buy the other one, it's like they didn't make any money.
No, exactly.
Right. So, did you really win? Not really. So, you know, it's paying attention to shit like that.
If you got equity in your first house, like 10, 15 years in, and then you use that equity to buy second and the third, you know, that's what like Trump does, basically, you know, just never sell anything.
Yeah.
But most people don't do that.
No. And well, the funny thing about it is in the U.S., the tax code in the U.S. has a section called Section 1031. And that allows you to literally never sell your real estate because what that section says is that you can literally use any property to buy any other property and never pay taxes on it. That's basically what it says.
Right.
So it's like having a blank check as long as you have a property that's worth something.
Yeah, that's like back in 2016 on the election campaign when they were trying to hammer Trump for not showing his taxes. It's like, yeah, I don't pay your taxes. I'm smart. You know,
only an idiot like that's the thing.
Yeah.
That's something that people don't understand about taxes. Only an idiot pays taxes if they have to.
Right. Right.
Why would you give your money away if you don't have to?
I guess I've been an idiot for most of my working career.
Well, I mean, that's the thing, right? We don't know until we learn.
Yeah. Well, yeah, there's no way around it if you're getting a salary and they take it from the get-go. You know,
correct.
It's like, 30% gone, 30% gone.
Yeah, you're not gonna know, right? You're gonna think that you're just making money, and like I get taxed at 35%. I think it is. It's crazy, right? And that's just what it is because of where I live.
So basically, 25%. The first 4 months of the year, you're working for the G-man. You know?
More than that, yeah, it's really more than. I mean, basically a quarter of the year.
Your tax-free days coming up.
A third of the year, a third of the year. I mean, tax rebate. Think about it. The average person might get $1,000, $2,000. The only people that benefit is if they have kids. Right? They're the ones that are really getting the money because guess what? Whatever you get on average, you get like that's what you're giving away every month. You know what I mean? So I'm getting 1/12 of what I give. So it's not really like a boon. You get what I mean? So they could keep it basically. For that, give me all my checks. Like I don't need this little bit of shit. You know what I'm saying? It's kind of crazy. But
when I used to work in the States and I used to put like 22 dependents or something crazy because I ain't lending my money to the government for them to keep for years. Like, nah.
Yeah, I know, I get it. It makes us dumb. I know that's my whole point. Like, it's retarded. But, like, it makes no sense. But you know, it's the way things work here because people. Anyways, so market's looking a little crazy. You know. Right now, Hex is at an interesting point because right here, what you're seeing is basically a wedge, right? And typically, when a market is in this type of structure, let me get these moving averages out of the way. It typically means it's gonna kind of shake out of that and kind of fall lower. And as you guys know, I'm always looking forward to a dip in Hex. But it's good to know exactly what's going on and why. And as you guys know, there are liquid wallets out there that are selling that have significant quantities of Hex, you know, that they're actually liquidating, right?
I mean, this was kind of a natural level for people to take profit. Yeah, so.
Yeah, exactly. And that's the thing, right? It's natural. And that's what people have to understand. But here's the difference. The difference is that this here is no longer probably going to happen. Because the amounts of liquidity that existed during this time are no longer prevalent in the system, right? And I'm pretty sure we all saw what happened for basically every day since March 15th. Oh, not even. Since March 11th. Wow. This has been going straight up for 20 days.
When Free Caps did their big old stake?
I don't remember what happened March 11th, but I
think
know.
it was, dude. Like pretty much the day.
I remember the 15th. That was the day of the big stake ending, right? And then they ended up restaking and everything after that. So that, of course, made everything right.
Interest. It was like 45% on this stack, right?
The first one.
Yeah, that's right.
Yeah, the first one. Doing two. They ended up doing two.
They did two. The first one was for, was it 10 years? So basically,
yeah, it was 10 years. You're right. Yeah, it was 10 years.
They looked at the bonuses and like say they got their free money and it's like, yeah, okay, we just max out the bonus and just stick in 10 years, right? But the second stake, that was a validation of of the hex, basically. That was like, was it 555, right?
Right. Yep. That second one, I think it was 555.
Yeah.
Yeah, I think it was.
Hopefully you're watching your shows, man.
Man, I can't keep track of all of that shit. There's too much going on, brother. There's too much going on. Let me get these. I almost got the charts done because I want to go in depth into the charts today a little bit more than usual because I want to tie everything together. Kind of give the bigger picture of what it is I'm seeing because now I'm fairly confident people are seeing more clearly what I've been saying from day one. And I'm pretty sure I don't sound crazy anymore and all that fun shit, which is great. Because now people are going to really be able to see things a little bit clearer. And that's always good because we all benefit from that. And that's the good thing about the system of Hex because it's something where we all are available to, interact with the system however we see fit. Right. But the cool thing about that is that whether you're a whale or not, you're not really shaking out of the system. You know what I mean? So that's very cool because what that means is that if you're new to Hex and you're watching this stream or any stream for the first time, you're gonna end up realizing that you're not too late. Right. And that's always great because usually after a year or more of something being out,
people are like, you're so freaking early. Like, it's under 2 cents.
Oh, no. It's not 2 cents. Those are the facts.
Yeah.
Like, that's just what it is. If somebody doesn't agree with that, that's their problem. Like, that's just the reality of the situation.
Oh, not your 2 cents. It's under 2 cents.
Oh. Yeah, that's the funny thing, right? It is under 2 cents, so those aren't even worth 2 cents. That's a fact.
Right.
That's true.
Yeah,
right?
Yeah.
Because look at what happens every time Hex tries to go down. Like people have to literally force it down, like force it.
Yeah.
Like it's very important people understand that.
Let's just rehash that thing. Like we've been under attack for like since the very day one. We've been under attack from people who were in the system that didn't really want to be in the system, and from let's face it. Look at Ethereum. Why is Richard forking it? Because
has to.
Yeah, it has to. Yeah, exactly.
It has to, and it just goes back to
they forced his hand. So well played to him, man.
Yeah. I mean, it is what it is. The cool thing is that it's going to open up a whole new world. It's going to create a whole new chain that didn't exist before, that people weren't trying to create. And typically when that happens, there's second, third, and fourth order effects. And this is what people will discount and not take into account.
And interesting thing that I can kind of connect is so the launch phase and the adoption amplifier, that was copied from the EOS ERC20 basically launch, right? It was basically you put an ETH and for 365 days or whatever it was, 350, you got your ERC tokens back, right? So Richard copied that. That was a good, sensible way to launch a project or product. And the EOS project, what is it basically? Is this basically 25 guys, 25 nodes, just minting like 10 grand a day, essentially. So this is like a similarity. Like, how many new nodes would it be on the Pulse chain? It's probably like gonna be like minimum, what, I'll say 100. Anything less than that won't be decentralized enough. So it's going to be minimum 100. And but basically it's the same kind of business model. You're basically putting an economic engine into the network, which they were in EOS. People were fighting to stay in that top 20, right? Yeah, so it's kind of similar what going on with T-shares, you know?
Right.
It's like the battle. It's the battle for longest stakes, right?
Yep.
So yeah, it's gonna be interesting.
Yeah, but you know what's even more interesting is that you don't, like, when you stake, you're staked, right? Like, the only externality is how much bigger somebody else is going to be, right? But here's a cool thing, because we're all playing in one pool, right? So if a whale comes in and he technically decreases your payout, by default, the water level has to rise. So what's the water level? The water level is a price of Hex.
Yeah.
So you never really lose.
Yeah, I've been saying to people, like, I'm happy to slide down the rankings all the way back down to the squid, because that means, freaking A, Hex.
The price went up. Because that's what happened. That's literally what happened. When those whales entered, and there's been a lot of whales entering lately.
I want to go down. That's what I'm trying to say. I want to go down the rankings, not up.
Well, yeah. Ultimately, that's what people are going to figure out, right?
Yeah.
Ultimately, people are going to figure that out because it's going to happen regardless. And that's the important thing, right? Like, once.
I'm not saying not to get as many T-shares as possible right now. That is the goal. That's what you should be able to do, but long term.
Because the T-shares are going to go up in price regardless.
Yeah.
Right. And we all see that clearly now. And the T-share rate is now zooming higher. I think it went up like 11 hex overnight. Or 8 hex overnight, some crazy shit like that. So, the system is now moving, right? Like, it's not a sluggish situation like it was before. It's completely different. Now it's moving. Like, it's moving for real. Let me see. It moved 11 hex overnight. Wow.
1.72 on GRAPHHEX.
Yeah, 1.7208. And it was 1.7197 yesterday.
Yeah.
So no games being played by the T-share rate, that's for sure.
No, you're right.
Yeah. Yeah, the day before it was a 9 hex move from day to day.
I think we're going to get 20 grand this year. I mean, 20,000 hex per T-share, right?
Hell yeah, we are. We went up 70% in 1 year, bro.
Yeah.
And that was in slow motion, right?
Yeah.
So we're definitely gonna go up. I mean, that's only what 30%.
The big payday, obviously boosted up 50. Yeah.
I mean, but that's the thing, right? The system is designed to do 3.69% inflation a year, right? So if you back that out into the share rate and you calculate the quantity of hex, I'm pretty sure that number would be more than 20,000 because that share rate is going up every day regardless. And then the thing about it is you have that added, what's the word I'm looking for? That added pumpamental, right? Because that's really what it is when the stakes end, because that's what continuously drives the share rate up. It's when the stakes end, right? So if you got a lot of stakes ending, sorry, man.
The ratcheting, isn't it? So as the rate goes up, the T-share rate goes up, the hex price kind of like feeds into that, the earnings go up, and that creates the FOMO effect. It's just correct. A spiral. It's just never ending. It won't end. It's like
correct. That's exactly how it works. It's like a hot potato between three legs. Right? It literally is, because you have the T-share rate, you got hex, and then you have the T-share dollar value. right? Like those are the three things. You got the hex dollar value, the T-share dollar value, and then the T-share rate.
Yeah.
Right now, the T-share rate is over. I'm sorry, the T-share rate comes from the T-share dollar value divided by the hex dollar value multiplied by 10,000 hex. That's what that is, right? So when you take that T-share rate into account, like when you really sit there and think about the T-share rate and what it's doing, right? When it's moving up a lot, that means that the rate, like the T-share dollar value, is going up a lot, right? That's what that means, and that is usually a function of a lot of big stakes ending, or a lot of stakes with high ROI. Jesus, and ending the system. Give me a second, guys, because I live in a freaking combat zone. Hold on.
Where's our boys? Axis, Tantomi, Dipcatcher, eh? I think they're coming later, so I'll just take over for.
Yeah, I don't know. I don't know when they're gonna show up. I don't know if Tantomi is gonna show up or not, because he's doing his own thing today. In a little while.
Cool.
I think Cabana is gonna be streaming at 5, so you guys might definitely want to go over there and check that out if you want some non-technical information and you just want to BS. I plan to go there after I'm done with this stream. That's why I go to party on Fridays.
Let's get technical then.
Let's get technical. Yeah. So right now, what we're seeing is a wedge. This is an ascending wedge formation, and if this ascending wedge formation actually does give, let me see. Let me get some drawing tools here. If this ascending wedge does break, what we could see is a nice little dip in the hex price, which would be outstanding, of course. Maybe we're gonna move to there. Maybe a move from there to here. Hold on, because this thing sucks. Maybe a move from there to there, and maybe a move from there to there, which would be a nice shakeout move to get all the dummies out, and then finally, off out of bounds, right? Because that's clearly where we're going. Because once we break out, and this is really a worst case scenario, this would be like a shakeout move. And the thing about it is, this actually isn't even that realistic. No, I realize.
Look how long this pattern is. This is from May last year, man.
Right. Yeah. We're gonna get there. Don't worry about it. Like I'm gonna walk everybody through it, because this is pretty crazy. Like what's happening right now is very crazy, because the market
it's resting on the tops. Basically.
Yes, it is resting on tops, and that's the key, right? Because if you look at this horizontal line, let's get rid of these indicators. If we look at this horizontal line at 1.5 cents, that now looks like clear support, right? So what should happen, because here's the thing, the market's bulled up and the markets operate off of sentiment. Now, Hex is a little different. And the reason it's different is because the people in Hex aren't looking to just make profits on an intraday basis or on a short-term basis. In general, that's not the case for this market. This market has long-term operators in it, right? Like you're just getting in there and you're just sitting down and you're just watching the movie for as long as it lasts. Like that's what you're doing. So that's why it takes Hex so long to go down and finish going down versus how quickly it moves up, right? Like if you all right, we'll get there. But long story short, a great move would be for Hex to slip to support. Looks like that's where it's going to end. Bounce up, roll over, give us a nice down spike, hit some type of support area, which would be below, right? This actual support area, right? And then boom, that's where it would actually take off, assuming, right? It actually
fantasy right now.
Huh? Was that?
This is Wells's fantasy scenario.
Yes. This is my fantasy dream scenario. This is what I dream about every night when I go to sleep. So yeah, this is what I would wish would happen. Because
when you say the ABC correction, like the one down, the one up, and then the
right. Yeah, I don't get into all of that until the wave shit, because the market's gonna do what it does.
Exactly. Yeah.
But it's true to a certain extent. It's just hard to call all those waves, right? So I just don't get into all of that.
They always freaking change. I don't.
Yeah, exactly. So I don't like dabbling with that. But something like this is realistic. But this is like a continuation, right? So this is really this. right? Like that's what that really is. And let me make it maybe a little thicker. Maybe those lines aren't thick enough. Let me see. There you go. Right, like, or maybe change the color too, because that looks kind of stupid to be the same color. Now that I think about it. So these yellow lines are like my dream scenario, right? The ideal scenario, because you have people thinking Hex is broken out. And, you know, everybody doesn't watch my stream. Everybody doesn't try to educate themselves. Everybody isn't going to be in tune with what Hex actually is, right? So this is why you're going to get people that end stake early, just when you think you're going to stop seeing that. You know, people are going to emergency end their stakes nonetheless. And that's what you just have to realize, because it's just going to happen all the time. So, you know, if something like this were to occur, it would make sense. But given that it's Hex, something that's more plausible is probably something like this, where it just lollygags all the way down and it takes forever and it frustrates people and it makes people think that it's not going to happen. This is over. Hex isn't really going to zoom out. It's really not going to do anything. And then what ends up happening is, you know, you just get Hex touching support here. In this
What's up? Can you draw one more trend line for me? So go to end of June, that low. End of June last year.
Last year. Sorry, we're not in June yet. Whoops.
Yeah. And get that one, and go draw trend line, hit that one in November, that bottom. So and
hold on, let me get the price correct. 2745. All right, that's close enough.
Basically, I want you to draw a midline for this wedge. So from there to November, what, 3 or 4? There's a little low, that wick. Hit that wick. No, on the low. Go down. Yeah. Up. I want you to draw a midline. So go up. No. Early in the month. It's
early in the month, sorry.
6 cents. It's around 0.06. Yeah. There we go. And then just continue that up, that trend line. Oh, no.
Oh, you mean just continue it higher?
Yeah, exactly. Yeah.
You're trying to draw a midline. I'm sorry.
Yeah, midline. Yeah.
That's why you kept saying that. I'm like, what the hell is this guy talking about? I forget about all these technical terms, brother. I'm sorry.
I'm sorry.
I had to pull it out of the brain. I'm trying to leave legacy finance behind. You must understand.
Yeah, I don't blame you.
Yeah, for sure, man. I spent too much time wasting time on that shit, bro.
Yeah.
Life is good now. I really want no parts of it. But this is great, right? Because we know about pitchforks, and if you guys don't, we'll get into it shortly, but this is where the midline concept comes from. And what I'll do now is I'll throw a pitchfork on here because you guys probably never seen one before. And ultimately, a pitchfork operates off of the initial move. And what you want to see is the market get some structure. And I learned this from an old school guy. I can't remember his last name. First name is like Timothy Gorge, I think is his name. Tim Gorge. Old school trader.
Timothy Sykes.
No, fuck no. No, please. Spare me. No. I deal with pros only, brother. I mean, it's either blood, sweat, and tears or from somebody that actually knows what the fuck they're talking about.
Yeah.
You know what I'm saying? It's crazy. But yeah, so we're going to drop this fork on here. And basically a fork, it comes from the first real move before. It comes from the first gyrations before the move. It's the best way to put it. Let me make sure I grab this low correctly. Yeah, this looks good. Right, so that's one option, right? Because this makes 0 sense. So why would you do that?
That's what I'm saying. What are you doing there, Wells?
Yeah, it makes 0 sense, right?
But you don't actually pull it out.
I gotta figure this one out because I usually draw them freehand.
You want to draw?
Yeah, no, this isn't it. I think I got this one figured out because every trading platform has like their own crap. So give me a second. I think this might be it.
No, you want to take like major high and a major low. So get the major high first and the major low. You right? maybe going to one in.
Yeah, I don't know. This shit is funky, bro. I'm used to drawing it with my hand, so in reality, it would just be some shit like this.
Yeah, basically. Yeah.
Like that's what it really is. I don't know exactly what that shit's trying to do, but it's cool. I'll figure that out and then show you guys at some future date. That shit doesn't make any sense. But ultimately, this is what the pitchfork will look like. I mean, what it ultimately is doing is just grabbing the structure of the price and it's giving you the path upward.
Yeah. You got it. You got it.
Yeah, that's really all it is. It's cool because it kind of gives you market structure, but as you guys can see by the green lines, market structure can change over time. So what the pitchforks do was that,
and it should change.
Right,
Yeah.
and it should change. You know, nothing is linear, right? And I say that frequently.
If it was, we'd be all fucking Caribbean already. You know what I mean?
Yeah, yeah, for sure.
Yeah, man.
Oh, so somebody's asking if I can't use the indicators. No, I don't give a fuck about indicators. Sorry, I've never had to use them. I actually know how to trade. I don't need indicators. Just to answer your question, bud. Talking about ego. People are funny. So yeah, so this is what the pitchfork will look like. And ultimately the pitchfork is just grabbing the overall market structure because as you guys can see, over time, the market structure is going to change, right? Nothing is constant, especially not with markets. So this is why you don't really see crap like that on my charts ever. It's one thing to have an outsized structure, right? Like something like this, that's pretty definitive. You can see that over time, price respects that. Even something like this makes some sense. But something like this, not so much because that's fleeting. That was in the past. The price is not respecting that line still, right? Like that's something that happened back July through September 2020. So that's not anything you focus on. That's just something that's a tactic to remember for the future. Drawing vertical lines sloping downward, right? Because that's not really going to do anything for you. So when you're sitting here and you're just plotting out scenarios, just realize that that's all you're doing. It's just a scenario. It means nothing because you don't actually know until the market does what it's going to do, right? So all the indicators, all the lines you draw, everything you do on a chart is fucking irrelevant. So just understand that. The next time somebody tries to come at you for not using an indicator or not knowing how to use an indicator, because it requires intelligence to understand that. Because the indicator isn't going to fucking pay you. You pressing sell at the right time is going to pay you, and you pressing buy at the right time is going to fucking pay you. So make sure you understand that. Yep. So if X breaks that wedge, right, you guys know what to do. You really want to make sure you buy that dip. So now what we'll do is we'll get into the charts, which is why everybody comes here anyway. And as always, disclaimer, the information displayed in this broadcast is known to cause increased amounts of FOMO. Whales only and his guests are not responsible for any losses you may accrue for having weak hands. Stake accordingly. There we go. All right. So for the first 474 days, I don't know if you've seen this chart yet, Bala, but we're going to talk about this one. We are at 321% post big payday, which is what it's all about. And what this chart is showing is the price comparisons between Bitcoin, Ethereum, and HEX, along with the T-shares index since inception. And these are the respective return streams for each with respect to age, and the age being 474 days. T-shares, which is the magenta line with the yellow hue, is at 13,651% rounding up, while the HEX index, which is the, I guess, red line with the white hue, is at 7,670% rounding up. And then you have Ethereum all the way down here at 816% rounding up, which is the orange line. And then Bitcoin all the way down here, still dead, flat line with 0. Now, here's the important thing to note. This line right here is a new trend line that I've added to this chart recently. And I also threw it on Ethereum just to highlight something. And what I want to highlight is this. Let me pull up the internet again and let's look for logarithm charts. Yes. Because you guys know I love to get into that math. Where the fuck is it? All right, now here. Yes, here we go. Now I'm just looking for the right one. I think I would have saved this shit by now, right? Oh, actually, I do have it saved somewhere. Fucker. Would have thrown that shit in the deck. Give me a second. I know your ass is somewhere in here. Nah, that's too much. Boom. That's it. That's it. Okay. So, what you own is this. Log base 2. We've gone over this in previous videos. Please revert back to those if you have not seen them, specifically the first one and the second one and the third one, actually. So what you own is log base 2. What Ethereum is...
Why is that, though? Why is it log base 2 and not log base 3?
Great question. First off, let's look at the curvature of the curves. The curves being the trend lines, right? And you'll note that the values that they take on are relative to the power function of 2, right? So what do I mean? Okay. So log base 2 is essentially giving you all of these values, right? But along this logarithmic line, right? So if you look at every pause that Hex has in terms of a return, right? Just look at these values: 1, 2, 4, 8, 16, 32, 64, 128, 256, 516, or 512, 1024, right?
Which is the values on your y-axis chart you make.
Correct.
Right.
Right? 20, 40, 80, 160. And what is Hex doing all along?
Yeah.
It's pausing at those values, brother. 64, 640, 128, 1280. Right? Timing might not be on point, but it's always going to tackle those values. And once it does, then it's done with them. You see? 256. That was the most recent battle. That was a big payday battle. 256. But in big payday was 250. It was 2,560%, right?
Yeah, you just draw a line across and it was bouncing off.
Correct. And the next level, 512. And now that's support. Well, at least it was. It no longer is. So the next level is 1024. And after that, 2048. So this is what I've been talking about from day one, right? And now, now I've been able to figure out how to throw this stinking trend line in there because I didn't know Excel had that crap because it didn't have it before. Yeah, it didn't have that before. So now it should be easier for you guys to understand what I've been talking about because this is what's going to happen. This is what you own. There can't be a log base 1.
That'll be just like a diagonal line, right? Just be like, yeah, I'll get you.
Right, right. Let me take care of this fucking loser in the chat, man. Let's see. I don't know if I can just remove this guy from here.
Skoda La Skoda, I'm assuming you're talking about.
Huh? You know what? I see. Let's see if I got any homies in here. Yeah.
Give out some ban hammers. DJ Cryptomatic will sort them out.
Was that?
Give out some ban hammers, and DJ Cryptomatic will sort them out for you.
Right. Yeah, I got him. Got all his messages later. I don't know who this guy is, but he could ask some questions if he wants to learn something, because that's how we operate here. So yeah. So the trend line is clearly real. Otherwise, it wouldn't be there because it's mathematical. And this is that trend line. And these here values are clearly on the chart, so it can't be bullshit, because how the fuck they get there? So there you go. So think about this, because this is the whole point I want to bring to light. Anytime you buy Hex along this chart, along this return stream, right? This is literally always going to be this chart, no matter how old Hex is. And this is what people have to understand, because this is the nature of Hex. This is the nature of Ethereum. This is never going to change, right? And this is why they're altering their protocol to replicate what Hex has done already.
They're power free. They want to be power too.
Exactly. So we are already here. We're early adopters. We're already ahead of the game, not only in APY, but we're going to stay ahead of the game in APY. And we're going to stay ahead of the game in terms of returns, because our cost average is basically zero. Our cost basis is zero across the board. If you got into Hex anytime during 2020, your cost basis is essentially zero. Period. If you got in before November 2020, your cost basis is zero, because 1 cent is zero, right? And any return based on anything you pay 1 cent for, and it's more than $1 when you sell it, I mean, you can do the math, right? That's a whole fucking lot. So, this is what I want people to understand. First and foremost. Second thing I want people to understand is that when you buy Hex, this parabola, this line, this logarithmic function here, which is Hex, log base 2, is what you own, right? So anytime you buy Hex, you stake it, you own this curve here. This curve is literally what you own. The longer you hold it, the bigger the values at the end of this curve are going to be. That's it. That's literally what you need to know. So if you're buying Hex and you're staking it for 15 years, can you imagine what these values are going to be at the end of 15 years? This is only 474 days in.
It's going to be like 7-8 figures, right?
Probably. Who fucking knows? I don't know. I don't know. I have no idea.
Can you send your Excel chart out to what?
I think the chart only has, or Excel only goes down to like 1.467 million. Yeah. So
I think it might be that.
Yeah, this is crazy, right? Because here's the thing: no matter what, Hex has always been shaped like this. What's that? Go ahead.
It has to, because Bitcoin did 6 million, right?
Wow. Yeah. I mean, look, it's a network effect, brother. The more people that get into the system, the faster it's gonna happen, and that's it. Like, it's gonna happen regardless, because this is a function. And the people here's the thing, right? Like, we all exist within Hex, right? Like, we already know the system exists. So just based on that, this shit is always going to be used, because people know it works. Now, I don't know about you, but I don't know about any money printers anywhere else, right? So I'm always going to be buying Hex and staking Hex. And that's pretty, like, this isn't something that you just do on a pass-by basis. Like, I don't know about you guys, but I like to make money all of the time. So I plan to use Hex until it no longer exists. And I plan to teach my offspring to do so as well, and anybody that I can, because this is a tool for us to use, right? So this is always going to be around. So to think of it like if it's a pass-by thing is crazy. This is not a pass-by thing. This is not a fly-by-night situation. This is some real shit. Oh, hold on. I got a little question. I've been trying to figure out T-shirt preservation, and it seems that over enough years, it will walk away from each of us. So here's the thing about T-shirt preservation. The longer you're in the system, the better off you are, because the more returns you're going to make, right? Like, that's just what it is, period, right? Like, that's just what it is, no matter what. No matter what. That's just what it is. So, you know,
Tell them the staking strategy.
right. That's just it. Like,
every single one, right?
right. Like, here's the thing. People can pretend that they can make more money trading all they want. But at the end of the day, you can make money trading, but you will also lose money trading. That's a fact.
For a period, you can make a lot of money.
For a period, it's never like you're always gonna make some, but you're always gonna lose more time than you make some. So this is why keeping your losses to a minimum are key, right? Like risk management. That's like the number one thing you will always hear from people on Wall Street. Now, why is that? The reason for that is because, like I told you guys, well, I don't know if anybody's ever heard this story, but I'll tell you guys a little story. When I first started trading my own account, I started with $7,000. This was in the summer of 2010 when 2011, when volatility was crazy and the US got downgraded. So this is how I learned how to trade. I learned how to trade in a high volatility environment. Now, what does that mean? That means a couple of things. That means that I didn't know how to trade a slow market. And what that meant was, on top of that, was even worse. And what was worse was I ended up making 10 times my initial pot in 6 weeks. Now, why was that horrible?
Wow.
Because I thought I knew what the fuck I was doing.
You thought you was a genius, didn't you?
Yeah, I thought I fucking knew what I was doing. Right? Yeah, that's right. These consoles, yeah, quick margin scalps and I'm out. Yeah, that's right. I wasn't thinking like that, like, because this is the thing. I was making crazy money, so I was placing like literal trades that were like at the open of the next session, and they were fucking lasting 24 hours, and the market was moving. So I knew I was gonna rake P&L no matter what the market did, because I knew the direction the market would go. Because I could call that.
Were you trading ES futures?
Mm-hmm.
Yeah.
I was trading E-minis. I was trading treasuries. I was trading all kind of shit, bro. But what I didn't understand at the beginning was that all of those trades were really the same trade, right? All of those trades are really the same trade. People don't get that. If you're shorting, think about it. If you're shorting treasuries and you're long E-minis, which are the S&P futures, it's just a stock market. And now here's the thing. They're supposed, for the past 35 years, they've been decorrelated or reverse correlated or uncorrelated, meaning they go in opposite directions, right?
So you're trying to amplify your gains, basically.
Correct. But here's the thing. Are you really amplifying your gains when you're exposing yourself to markets? You're not.
No.
You're not. So that's what it took me a while to learn. Anyways, long story short, I went from 70 to 70K and then I blew up because I thought I knew what I was doing. But here's the fucking crazy part, which I ended up finding out later. After a while of me being blown up and fucking up and being broke again and all that shit, I went back to look at my P&L, like how I made my P&L. And what I didn't realize was that I made $300,000. But guess how much I lost? $230,000.
Oh man, I've never looked at my statements, but I'm sure mine were like the same. But yeah,
but that's the point, right? So here's the moral of the story, guys.
They got you playing every day, and tick by tick, didn't they?
I mean, that's the thing. The market was moving so much it didn't matter.
Yeah.
That was the crazy thing, because when the markets are moving 20, 40, 50% in a day or whatever crazy number it was doing, it was irrelevant, right? Because your P&L will reflect that change in a leverage sense, because you were using, $400, $500 in risk capital to take on a position and make some money. Like, it wasn't anything crazy if you had an understanding of the math, right? And I was fortunate enough to have some understanding at the time, but I still didn't have enough, right? And that understanding was not understanding what happens when you cut yourself 1,000,000 times with a piece of paper, right? And what ends up happening is that you end up draining your pocket. Like, you wouldn't even, like, you don't even see it coming, because you think you know what you're doing. You think you're taking your time. You think you're learning. Like, a matter of fact, we were talking about this earlier, weren't we? I think we were talking about this earlier, where we thought, we spent a long time trading and learning how to trade is paying how to trade.
pretty much. I paid for my like a master's degree or like an MBA from Harvard.
Hell yeah.
Believe that.
Yeah. All of these things you see us tweet and hear us talk about, that shit costs us money and we're giving it to you guys for free. So you guys got to really understand that. Especially when you got clowns like that hitting up our streams and talking shit. Right? Like, who the fuck is that guy? I've never even seen anybody with that name in a stream, any Hex stream before. You know, I let him rock for a little bit. But if you're just going to keep talking shit and not add no value, you know, get the fuck out of here. Because if you don't know, that's fine. I can teach you. But nothing I'm talking about is fake. It's clearly on the charts and I didn't make it up. I don't got that kind of time, bro. Like, I'm streaming a day because it's a day off. Otherwise, I wouldn't even be streaming. Hey, Cabana's starting in 2 minutes if you guys want to check it out. As you guys know, we always support each other as Hexicans. So hop to it if you're going to.
Shout out to Cabana.
Yeah, shout out to Cabana because he's super fucking cool. Super cool. Let me close this window. But yeah, so this is what I wanted you guys to understand, right? Like when you're buying Hex and you're staking it, or you're buying it and you're buying it, and here's the thing, right? This is what Hex is doing in the pink line with the white hue, right? Like that's what Hex itself is doing. Period. That's without staking. Right? Like this is just price return. That's it. You know what I mean? So this is the T-shares, right? And that's I think 70% or so differential.
Yeah, there's an argument to having like a 10-20% stack, just liquid, because that protects your T-shares, you know what I'm saying? You know,
yeah, it kind of does. It kind of does. That's one way of viewing it. I mean, here's the thing, man. I think if you're going to be staked, the majority of your stakes should be long-term, just based on how finance works. And I don't see that changing anytime in the future. Like, I just don't see that changing, especially if, like, Hexican community isn't big enough to shut all the bullshit down that's going on now, right? So if motherfuckers want to give you fiat for your crypto just so you host, just so you can just so they can have it as collateral, well then so be it. Good for them. But when you're well off in your crypto stack, right? Like we're gonna be, because here's the thing. This is a difference between Bitcoin 2010 and Hexicans 2021. Now let me give you guys this picture because this is the reality. Because I was around for that point in time. A lot of you guys weren't. At that point in time, when Bitcoin went up, motherfuckers was selling. They weren't looking to buy more. That's very important to understand. Because that's a fact. Don't take my word for it. Go into the chart, into the chat boards. They're still there. 2011, 2012, 2013. Anytime Hex, god damn it, Bitcoin. That's Freudian slip. It must be telling you guys something. Listen up. Anytime Bitcoin would go up, people will be selling. And what you're going to end up seeing today is going to highlight just that. So we're going to get right to it because it's the second chart. Oh, wait. Before we move on from this chart, I just want to make sure I say this in one foul swoop. When you're buying and you're staking Hex, you're buying this curve. This logarithmic function is literally what you're buying. So consider this. When you're buying and staking Hex, the longer you hold this parabola, the greater the value of your Hex and your staked Hex is going to be at the end of that stake. Because this curve will always be true. So the question is, how far up do you want to ride this curve? That's the question. Because that's the reality of what's happening. Period. No debating that. Like, you guys see it on the y-axis. And if you don't want to believe me, you can take the return streams and calculate it yourself. Perfectly fine. Because it's there to be had. This information is not mine. So I can't make it up. We'll move on to the next chart. Now, this is what I was just talking about. This is the Hex Pulse Big Payday chart. What we have here is the first halving index, second halving index, third halving index. As you guys already know, orange, blue, and yellow, and green, respectively. So orange, blue, and green, respectively. First halving and second halving, second halving, and third halvings of the Bitcoin. Then we got Hex, supposedly payday. Now, usually, Hex has been behind by 80%, but what we are seeing now is a sell-off in Bitcoin because it was just at 1,000 or 2,000%, whatever the number was, the previous couple days.
That's 2012, right?
Yes.
Mm-hmm.
We all know what happened then. And if we don't, let's refresh our memories. Not a problem.
Oh, shit.
Yes, sir. Oh, man, look at that. That's looking a little funky, isn't it? Well, look, you guys heard it here first in February, so don't say you weren't warned. Oh, wait, we need to go to the BLX chart.
Yeah. Or Bitstamp or whatever, yeah.
Yeah, whatever has all the price history. This is the quickest one for me.
I mean, this is what Richard talks about. He bought the $30 top, right, and it went down to $2.
Something like that, yeah. So let's see. November 2028 was the start of that, and we are 138 days post payday. Looks like it's this, maybe.
I think the $30 top coincided.
This might be it. Yeah, I think it might be this.
Yeah.
$160 one? Because it was 100 days. Hold on. 136 days. Let me do a day count.
No, that's too far. I think it's that July 2011, no?
Hold on. I'm going to do it right now because what I'm going to do is I'm going to count with this ruler and get a measure. I'm just trying to get the date. Here we go. And we're looking for 136 days or so.
Yeah, there you go.
Oh, okay. So I'm still far off. How about that?
What the hell?
Yeah. Bill's only stream strikes again, baby.
Yeah, okay.
Yeah, wait, well, there you guys go. We're going to get a nice little down move in Bitcoin to this support level. And as you guys see here, it's the top of this resistance area, just how markets work. So this was the top in November 25th, 2013. Yeah, that's what I expected, actually.
Mt. Gox, right? Event.
It probably was Mt. Gox, but I don't really remember because I think Mt. Gox might have been 2014, 2015. I don't remember exactly. Like, all those years were a blur for me, man. I was really fucked up in the game, so I don't really have any clear answers for a lot of things that happened during that time.
Yeah, I wasn't invested. I wish I was.
Yeah, I was really, messed up in the game, so I don't really know. But as you guys can see, let's get rid of this log situation just to make it a little easier for people to visualize. This is what happened, literally 2013. Okay. Price just skyrocketed.
I got a date for you. February 2014. Suspended trading.
Okay, cool. So there you go. So price skyrocketed. And then from there, all the way to 260 whatever. The high here is 268. If you look up here to the left of my highlighted cursor, the high is 268.67. And then price traveled down the next day to $51.30. Imagine having your holdings go from 250 to 50. That will fuck some people up in a bad way. So be ready. I don't think Hex is gonna get those kind of moves, but anything's possible because this thing is crazy. So you just don't know what kind of FOMO you're gonna see once the world wakes up to reality.
You gotta give respect to the early Bitcoiners because the reason why HODL came about because it was fucking scary holding Bitcoin.
Yes, it was. That's true. That's very true.
Imagine Roger Ver, right? He was successful before Bitcoin. He invested millions into it. I think sub $1, right? So do the math on that.
I don't know exactly. I don't remember exactly when he invested. And what I've been doing lately, actually, is I've been going back to what I can find to try to refresh my memory.
Trace Maya was like 50 cents or something like that. Ridiculous.
Yeah, it was cheap. It was cheap. That's for sure.
Yeah.
Like it was very cheap. I remember him doing his videos and all that stuff back in the day, and all that stuff he was doing. I remember him from back in the day, and I remembered Richard from back in the day. And what I remembered,
Oh, really?
well,
Oh.
what popped up into my head yesterday was I couldn't remember him because I never put the long hair on him. Once I put the long hair on him, it all clicked. Because I remember watching his streams back in the day when he would sit in the chair and all. Like his shit was a little different, but it's basically the same setup.
I didn't know that.
Yeah. Mm-hmm.
Okay. Now it's starting to make sense. Okay.
Yeah.
He's lived through the pain. He's lived through the pain.
Right.
Yeah.
So, we like to cover our history here on the Wheels Only channel because that's how we assure that we get paid. That's how we assure ourselves that we get paid, because history talks, bullshit walks. So as you guys are staring here, we have price basically go from the first halving, which was November 28th, which is here. Right? Like literally it just ripped from that point in time. Right? And when we go to Bitcoin halving charts, that's what we see in the first halving, right? Like it literally just ripped. And then poof. So now we know that Hex is about to be in position to outpace Bitcoin after the first halving here shortly. Something to be on the lookout for, guys. Because I'm going to make a shit ton of noise once that fucking happens. Because I've been talking about it since day one. So prepare yourselves, because I'm not going to shut the fuck up once it does. Woo! Yeah. T-shares versus Ethereum and T-shares versus Bitcoin. So the pink line is T-shares versus Ethereum, 14.8%. If anything, 13% might act like support. If anything else, 12%. I mean, this is just, we're really just covering ground, maintaining our value here. The T-share rate always goes up. The question is, will Ethereum and Bitcoin be able to stay going up? That's the question. Because as you guys have been watching, let's go back to the charts. The Ethereum is really looking crazy right now, right? Now let's go to an actual Bitcoin chart. And so does Bitcoin, right? It looks like it might be breaking out after all. It looks like RSI on the weekly is holding. It looks like it. It looks like it, right? But it's not tomorrow yet. So until this week is actually over, we have to go by what we see on this daily chart because it's conflicting. Now, the important thing to know is that we actually have, in this type of scenario, because we're expecting a top, tops happen slowly over time. They don't just happen like like you're smacking a handball against the wall or something like that. Like they don't happen like that. It's a process.
He launches a new product. Unless the CME launches a new product.
Oh, right. Unless the CME launches a new product. That's correct. That's right, which is what happened.
We said before they launched it, they want to tame the price of Bitcoins.
That's why they did that. That's exactly why they did that. That's the best that they could do. Yeah. And you guys see how successful that was. It wasn't. So.
I mean, kind of. They kind of caused the bear market, right? 19 and 20.
I mean, yeah, but was it really a bear market? I don't think so, brother, because that shit just kept going.
Yeah, on the zoomed out chart, no, it's just consolidation. But like when you were in it, it felt pretty bad.
I mean, yeah, but that's what happens when you don't actually know what you're doing, right? Yeah. That's why being a noob sucks, right? Like that's why doing shit when you don't know what you're doing is dangerous because you're always gonna put yourself in a fucked up position. And hey, we all
backing up. That's the problem. Like you don't even know what you're doing, so you don't know if you're doing things right. You don't know if you're doing things wrong.
You don't have a clue, brother. I used to trade spreads, and I didn't even know I was trading spreads at one time for futures, right? Like, like people just do the craziest shit because you don't know.
No.
Yeah, you just don't know, and that's okay. That's how we learn, man.
That's how we learn. Yeah.
Exactly. Like I learned a lot from watching people on YouTube too. And that's just the way it goes, That's why YouTube is so powerful. That's why it has so much power. That's why, I realized that, everybody has a market because everybody knows something that somebody else does not know.
I'll check this story out for you. This is really interesting. Like back in like the mid-90s, there used to be a channel called the Money Channel in England. It's gone right now, but back in the day, they were like an hour show talking about the UK stock market. And once in a while, they like every 2 weeks, so they bring out technical analysts. It'd be like the technical analyst corner, right?
Yeah.
And the dude would literally get on like a coffee table and roll out all these charts and all these lines he's drawn by hand.
Yeah. Because it was back in the day. That's how they did it back in the day.
And like nobody did it because it was just took too long, and you had to print out the thing, and
That's right.
Yeah.
It was different back then, man. And you know what's funny? From all the old heads I used to talk to back when I was on the other side of Twitter, they would state that was actually better. You would have a better grasp of the market. You would have a better feel for the market because you would literally, like, apparently your body, your mind just records things better when you write them down versus just looking at it.
You would do your trading during the weekend, then on the weekend you just roll out your big old chart, put on like an architect's table, and like start measuring and drawing, do candles, analysis. But I don't know if it's better now or it's not. I don't know. I think
actually, turns out there's still a company that sells that kind of paper, so you could still draw your charts by hand if you wanted to. As crazy as it sounds, because there are still enough people around doing it. So, I guess eventually, with the unfortunate passing of that group of people, we'll go that business. But they're still around somehow. But there's one thing I want to talk about, and there's a reason I have this chart still up.
Tell which company it is, because that's kind of cool.
Nah, I don't remember what company it was. I have to look it up. I don't remember off the top of my brain. I don't remember.
No
worries, brother. One thing that I just want to point out, because what I'm thinking are a couple of things. Because I really believe in the stock to flow model, so I don't think Bitcoin is done going up here in this cycle. I do think that this cycle is going to continue to 100 before we actually see a 80% correction, and I've stated this before. But what I do expect in the interim is a significant pullback. A pullback before we shoot higher, but
don't you think we had that down to like
no. So many people were buying in at that time. Like the sentiment just wasn't right then. Because here's the thing. It could be the case, right? It could be the case that is so. But here's the thing.
Because like 40, there was a lot of hype, and then went back down to 29 in a few weeks, so it was like
yeah, exactly. It went down kind of right away, and then it came right back up.
Yeah.
So 80% move is right back down to where it broke out from. So what I'm thinking, and this is from the high. So this is my thinking. This is my logic, right? How crazy would it be to get a move of that magnitude and then go up to 100K?
Yeah.
That would fuck some people up.
A lot.
A whole lot. And that's what the market's all about. It's all about max pain, and that's why I can come up with these type of stupid scenarios, because it's not whether they're plausible or not. It's just that they are plausible.
Yeah.
Because the market does whatever it wants.
Mm-hmm.
And that's what's crazy about it. So it's not. Go ahead.
But it's going to fuck a lot of people up along the way. That's the whole point.
Yeah, exactly. That's what it's all about. Yeah. Because the market is very comfortable. We all know this market goes up. We all know it only goes up. Even after it goes down, it's going to go up. No guarantee. That's a guarantee because it's designed that way. It's not a market that's really meant to go down.
No.
Right? Because it's denominated in crap. So it has to go up. It has to. The question is a network at capacity or is it not? Right? Because a lot of people they might not like it. That's what it is. It's this code at the end of the day. So it has to function like a system. Right? And when systems get over capacity, there's so many people interacting with the system and the system can't size up to meet demand, then it has to reset. It has to. right? And whether it's technical or by default, it's a whole nother scenario because what I'm expecting, right? And now here's the thing: what you could get is a move to here, right? Just back to support, which is about 50, 48K, maybe even 47, right? And then get a move into the support area of RSI. And if RSI holds and price, and then it ends up breaking over while it goes sideways, right? While it traverses, and people expect it to roll over. But what's going to actually happen is then it's going to go actually continue to go higher. But if RSI continues to do this, right, and it stays getting suppressed, similar to here, what's going to ultimately happen is you're going to have an attempt at an up move. Now, let me zoom in just to show what a top looks like. Price is going to attempt an up move, right? Because if you look at price versus the RSI, it's still above support up here, right? So it still looks bullish. It's bullish still until it's not. And that's how markets work. But when you go down here and you look at this RSI, it's traversing into support. So it looks like it's just taking a rest.
When it takes out 8,800, then you know you're in trouble.
Right. Correct.
You know.
But the key was watching price run into this glass ceiling here and then roll over because it never broke above that 55 RSI. It hit it and then it just rolled over and price just collapsed. Now, that's one example. Here's another one because it's always the same thing. Now, the difference between that first example and this one is that this drawdown was a little more, how can I say it, more of a distribution than a real drawdown. Now, what I just did was I took the log off of the chart, the log setting off of the chart, to give you guys more linear view of what happened. And I'm going to measure it, right? The top is here at 13,868. That doesn't seem right.
2019?
Yeah, that is right. That is right. Okay, I was here thinking I was in 2018. Sorry, guys. I'm not paying attention to the scale clearly. 13,864. Let's see. Good enough.
Yeah, but look at the size of the wicks.
Oh, yeah. Those are those fuck you wicks. I mean, we can't control that. You can't control that, right? So you got to look.
Look at the wicks. They're basically half the size of the candle, the wicks.
Yeah,
so,
but that's the thing, right? That's the thing about crypto. That's why understanding how markets work are important. Because if you don't, you're going to get caught up in those wicks.
Yeah.
Because here's the thing. If you're going to have exposure to a market and you don't pick the right price, there's nothing you can do about those wicks except sell if you don't like the price that they're at, right?
Mm-hmm.
Like, what else can you realistically do?
No.
You know what I mean? Like, you really can't do much about it.
Times those wicks by 5 times leverage or 10 times leverage. Oof.
Yeah, well, that's the pain you got to endure, right? Because why would you do that? Like, that's the thing. Why would you enter a market that is up X%, and clearly, I mean, triple digits or more, right? And lever up. Like, it makes no sense. Zero sense. So
end of February 2019, that was my last Bitcoin purchase. It was like $3,800. I bought like 5 or 6 of them.
Nice. Back here. But that's a good buy back there, bro.
Yeah, but I never. Oh man, I can't tell you this story. It's too painful.
Because look at that. Yeah. I mean, clearly you didn't act in accordance with what happened, but that's the thing, right? Like, this is how we learn. This is why we learn. This is how we learn, and we learn by making mistakes. Like, yo, I had Bitcoin too. I had Bitcoin way cheaper than you years ago. I can't even remember. Like, that's how long ago it was. I don't even know what my wallet looked like. None of that. I don't know anything. It's like it never even happened. It was that long ago.
Just in there, you know. Yeah, could be worth something right now.
Exactly. That's why I'll just pretend I don't even know. Because imagine I got fucking 100 Bitcoin somewhere and I don't even know.
Oh,
imagine that. But I was too fucked up in the head then, so I can't even remember most of that. So it is what it is, right?
It
So
sounds like you're in the New York party scene too much.
yeah, a little bit of everything, man. It was just crazy times. But this is what I want to highlight, right? You have this distribution happening. And while the distribution is happening, you have to remember people are always bullish Bitcoin. I mean, they weren't really then, but people in crypto, they were.
That's the narrative.
That's always a narrative.
Always up, always up, always to the moon.
Right. So here's the thing. Always focus on the RSI and where it is around the support area, because RSI works such that if it's not trending above the midpoint, then it's not bullish. If it's not trending below, then that, anything the opposite of bullish is bearish, right? And
It shows the double top and like the RSI just weak as fuck.
yeah, I mean, it's just weak as fuck. Exactly. So here's the difference when the RSI is not weak. As you guys can see, it constantly touches support, i.e. the mid-range, and it bounces off of it. And it just keeps going. And this reminds me of some other chart that I like to look at. Just to pull it up. Always touches that mid-range, bounces up, and just keeps going, no matter what.
Ignore the November. That's kind of... Yeah.
No, well, November, look at what it did in November.
Actually, not too bad, actually.
Yeah, exactly. So don't ignore November. Look at that shit. It's phenomenal.
Yeah.
It's phenomenal. Like, Hex has no downside. Like, it's like hell has no fury. Not when it comes to Hex, it don't. This thing is just crazy. Anyways, let's get back to the talk, right? I just want to show you guys how tops are formed. That's really what this is about. Because it's important to understand that tops are a process. They don't just happen at the snap of a finger, right? Like here, the distribution in Bitcoin at the time was crazy. Everybody was getting into it. Everybody was taking profits. That's just what happened, literally, right? So with that, you had a nice hefty double top, right? And then you had the market just get slammed the fuck down. Slammed the fuck down. And that was the whole crypto market that got slammed the fuck down. Now, what I want to highlight, go ahead, brother.
The high, 75% off the high, 20 grand to, woof, what, 5?
Let's track it. Let's track it. The high, what's going on, Will? Thanks for showing up, brother. Thanks for showing up for a minute, man. Shout out to the present day workers. I'm still working too. Not today, luckily, but hopefully none of us will be working soon. That's the hope.
I'm technically retired, but I'm still working, man.
Oh man, so okay, the first move down, wow, 70% basically.
Yeah, man.
65%. Let's call it 65%. That's crazy. That's crazy.
If you're 2x long, you're wrecked.
Yeah, big time.
Just a simple margin 2x.
So let's talk about getting wrecked. So when you get wrecked, what happens? Yeah, exactly. Will you definitely in Hex and not end up working for the rest of your life? That's right. When you lever up and the market moves down 1%, it moved down. Let's say you're levered up 2 times. When you're levered up 2 times and the market moves down 1%, that means it moved down 2% against you because you're levered up 2 times. And that's how that works. So if it goes up 5%, it went up 10%, right, for you. But if it goes down 10%, it went down 20% for you. So it's important to understand what leverage is, because that's really all it is. You're just multiplying at the rate at which your gains would accumulate, but also your losses.
Margin in crypto. Crypto's volatile enough. You don't need margin.
You don't need margin in crypto. That's right. You don't need.
I mean, if you're trading Walmart stock or ExxonMobil, yeah, okay, I get it, but you don't need it in crypto.
Yeah, so that's the thing, right? So when you're trading a stock, it moves 1 cent, right? And like that's it. That's really it. Like you're buying a stock, it moves up 1 cent per tick. When you're buying crypto, it's similar. But the difference with crypto is that you're able to buy things that don't cost you 10, 20, 30, 40 bucks, $100, 1,000, whatever the price is for a stock. In crypto, you can find things like Hex that cost you $1, cost you 10, or I'm sorry, not 10 cents, whatever the case is. Point is, you can buy hundreds of them, if not thousands, if not tens of thousands. And that's the point, right? And with that, that's how people can escape the rat race and can escape being stuck financially, and get out of their debts and all of that. Like, it's about the math and how you can generate those higher rates of return. It's all about how big your ROI can be, and ROI is your return on your investment. So, that's really the most important thing. And this is what I try to help people understand. And that's why I go by the math and I don't go by anything else, because understanding where your money, like what your money could do, is important, because that's what defines opportunity costs. That's what defines your opportunity set, right? Like, if you're a big institution and you have to choose between Bitcoin and Ethereum, and you can't choose Hex because you're limited for whatever reason, well, odds are you're going to choose Ethereum because it has the biggest bang for your buck, and you can achieve greater returns, right? Even though they're really not optimal assets, and I've shown you guys why. You know what I'm saying? Peace out, Will. I'll make sure to keep it short for you, brother. So, all of those things have to be taken into account, right? And we'll talk a little bit about that once we get back into the charts. But, understanding tops are important. Understanding how they happen are even more important, because they don't happen just because somebody snaps their fingers, right? Like, even that 2018 top, which seemed instant, right, wasn't. Right, like that took a little while.
You had a whole month. I said you had a whole month. It like topped in December, but then it went on into January, right?
Correct. Yeah, it started in December 7th, and you got another. Yeah, you got another.
That's when the all three took off. After
Right.
Yeah.
Yep. They literally ripped what, like 2 weeks.
Yeah. Look at Litecoin chart, whatever. Yeah.
Yeah. Literally. Hold on. Let's scroll down. I'm pretty sure I got Litecoin in here somewhere. Oh wait, maybe. Oh, okay, yeah. Look, they took off. Litecoin took off in January. Oh wait, wrong one. Sorry, guys. Hold on. Maybe Litecoin wasn't a.
Oh, no, it was like hanging around 100, and then there was that 400 in like an instant.
Here we go. Yep, sure did. Took off just like you said, right after that Bitcoin top. From 413 all the way to 1400. I didn't even notice that shit, bro. Oh yeah, that's when Mr. Lee sold out. That's right. Oh no, this is Ethereum. My bad. This is Ethereum. I ain't thinking I'm looking at Litecoin.
Look at that.
I mean, yeah, it's the same difference.
Yeah, same shit.
Same theory, and it still applies. So yeah, because Ethereum was an altcoin back then. It's not an altcoin anymore, but it was back then.
No,
it sure was. So yeah, I just wanted you guys to see how tops happen, right? Like, you guys see this distribution is occurring here, right? You have time to get out. RSI is rolling over, but the key is really in RSI not being able to get back up. And with that, you guys can see that MACD is also looking super weak, right? And the main thing I want to highlight is how the trend line is below the 0 line. For the MACD, once it's officially over and done with, it can't get back up. It can't. So you would have to wait for a divergence after that point between the RSI and the MACD to happen again before you can see a top, before you can see a bottom. I wasn't trying to get into all of that, but wow.
My Novogratz sold at 1400. Vitalik sold at 1400. So
no, yeah, Vitalik and Novogratz. I was talking about Litecoin when I was thinking about. I thought I was looking at Litecoin. Remember?
Charlie Lee definitely calls that top.
yeah. He definitely calls that top. That top of Litecoin was definitely his ass.
The day after.
Yep. He'll swear, and it's funny because he'll put it on his. I don't think he was tweeting some tweets the other day where he was talking about that shit. Like, it wasn't me. All right, brother. You only broadcasted the shit, but okay, wasn't you? I don't know if you remember. I remember that shit like it was yesterday.
Yeah.
He literally did an interview somewhere. I can't remember where the hell it was.
He was pumping the fuck out of it, promising all kinds of things.
And he was selling that shit. Like, he literally wanted an interview, and that was like the day he sold the stock.
He's the scammer.
Yeah, that ass. It's crazy, bro. It's so crazy. Yeah. Well, whatever. Anyway, back to these charts, man. All right, Hex Payout Index Return Metrics. We have the payout per T-share sum index, and that thing is looking crazy at 158,692% rounding up. And as you guys know, this is just going to be a straight line because this is just crazy. Yeah, DJ Cryptomatic, they were seriously pissed because that was foul. That's what scammers do, right? Like, we know what scammers are. That's why we're in Hex, because Hex isn't a scam. So, yeah. Payout per T-share index is at 521%. And this is going to move, right, with how the payouts move and fluctuate over time. The daily payout index is at 11,492%. And this is exactly telling you how much the system has increased its payout over time. That's what that's showing you. On to the next one. These are the Hex Payout Metrics. So as of last night, depending on where you are, as of, let me get this right, April 1st, 2021, 000 UTC time, these were the latest metrics for the system. So the total T-shares were 11,065,000. The daily payout was 63,582,000. Payout per T-share was 5.746 hex. And as of when I record this price, which was literally right when I started this live stream, the T-share rate we got with respect to the price at the time is 17,814 hex per T-share. If you don't know, the actual rate on the go.hex.com site is 17,208, which is actually 11 hex different than the previous day. The reason I'm mentioning this is because the day before that, the delta, which is the difference from one day to the next, is actually 9 hex. And the day before that, it was like 7. So I'm not sure if we're entering some type of parabolic phase with the T-share rate and how it's going to move, or if it's going to start looking like this. I don't know. But I'm getting very curious because what that means is this is going to require people to buy a whole lot more hex than previous. And not just that, it's going to change frequently. Like before, the T-share rate would not change that drastically for 24 to 48 hours. Like it just would not budge that much. And now we're seeing a lot of whales set short stakes. And it seems that that is driving up the share rate, pretty at a pretty, nasty clip. Because for it to move up, to go from 5 to 4 hex ever so often to then it being going from 7 to 9 to 11 over a 3-day period. I don't know if that's something that doesn't happen often or not, because I've never noticed it before, but it's been catching my eye lately. So I'm definitely keeping an eye on that. Because if this does happen to enter that parabolic mode, hard to say what's going to happen here. Really hard to say what's going to happen. APY as of 000 UTC, April 1st, 2021 is 37.47%. And APY is annual percentage yield, and that's what you will ultimately make for staking hex for the average duration, which is at 5.551. In case you were not aware, that's right.
We had like 6 months.
That's right, 5.5 months. That's the average duration. So as it stands right now, the average duration is at 5.51 years. So if you stake for 5.51 years, the annual percentage yield that you can expect is 3.741%, because the system pays out with respect to that. And this is what this line is showing us. So yeah. Now, payout per T-share sum line in conjunction with the Hex index, and as previously stated, Hex is the pink line, and the index is currently at 7,670, rounding up. The payout per T-share sum.
This is one of my favorite charts you made, man.
Yeah,
this is amazing.
It's crazy. It's crazy. This is 1,750 hex per T-share. Since inception, since day one. So this is just crazy because that's a lot of hex, right? Like in order to get 1,000 hex a day, it costs you, was that $16 or so? Yeah, about $16 or so.
So basically, you could have bought a T-share for like 50 cents, and it would have returned like $30 to you or something like that.
Correct.
Crazy.
Correct. Insane. Like,
Yeah.
like, you know, it's funny because they sound like small numbers, but the problem is that people don't magnify them to what they actually are, right? Because yeah, you paid 50 cents for that T-shirt, but if you put $1,000 in, that $1,000 just became 60,000 or some crazy shit like that. Right? Like
Yeah.
that's what that means.
Yeah.
That's exactly what that means.
That's what they did.
Right. Right. So it's important that people put things in the proper perspective and keep the numerical facts in check, because the numbers always provide clarity. Don't forget that. It's very important. So we'll keep it moving. And as of when I took this was this morning from GRAPHHEX.ROCKS, the T-shirt rate was, in dollar value, was $297.03. That's pretty crazy because, you know, it was $120 literally a few weeks ago. Down here, it was literally at $120. So, yeah, basically more than doubled since then, and so has Hex. So, deal with it. The 10,000 X is currently, when I record this price, right? When I started this stream, is at $166.73, and as previously stated, the T-shirt rate is at 17,814 Hex. I mean, this is crazy, right? Because this is this number divided by that number, right? That's what this value is. So if this value is moving greater than this one, or than the Hex, then this value is going to be up here, right? You're going to be overpaying for T-shares. That's what that means. So it's very important, you know, you guys understand that, because
happens what? It's only happened a couple of times, though. You know what I mean?
Right? No. It's only happened here and now. That's it. It doesn't happen often. It's just important for people to know, because T-shares are the most important thing the system has to offer. Right. So this is cool because we know when we're underpaying for T-shares and when we're overpaying for T-shares, right? And that's what we always want. We always want to be underpaying for T-shares if possible, because T-shares only go up in price. So I like to talk about this chart for that reason, because like the day that the T-shirt dollar value went to 300, like I was ready to buy Hex, man. Like I almost FOMO'd in, and I had to stop myself because I knew that was a stupid move. Because like, why would I overpay? Like I get it, I'm gonna get it back, right? But I don't think like that, right? I think like a legacy guy, so I want every fucking tick I can get, because I'm just like that, right? So call me greedy, call me whatever you want, it's okay. I'm just built the way I'm built, and that's fine. Because my goal is to get all the T-shirts I can get. So I didn't enter the system from day one.
It sharpens your skills, sharpens your 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 mental awareness of what's actually happening in the system. If you're not paying attention, what's expensive, what's cheap, then how the fuck do we know, right? So you do the things the right way.
Right. That's very true. I mean, and here's the thing. That's just how, you know, in legacy, you're taught to think like that. So I'm just going to think like that by default. And that's just the thing, because what you're saying is true, right? Like we know the system is going to pay us back, but why wouldn't we take advantage of the system to the fullest and make sure we maximize our opportunity, right?
If you get a 20% discount on your stakes, why not?
Yeah, that's what I'm saying. Like, why wouldn't you get that 20% to the tilt if you can? Because you need it. Like, that's what Hex is all about. It's about making you a whale. So take advantage of that. And, you know, it's not so much trade accordingly, but try to understand what's happening with the system. You know, try not to FOMO in when price seems to be ripping, right? Like, it's always good to buy the dips. It's never good to buy the rips. Like, it's never good to buy the rips. You never want to buy the rips.
Selling trips.
Buy the dip, sell the rip. That's what we call it in legacy. I'm not sure what your crypto folk call it, but that's what we call it over there. Maybe somebody could teach me one day. I don't know. I don't think people sell rips in crypto, right? I think they just take profit and shit, right? I don't know. Because this is the thing. You and me are really legacy guys. So we have a different way of looking at things. And, you know, you help me look at Hex the right way.
That also fucked me up in crypto as well. Because, like, when I make a double or triple. I was like, yeah, I've done well. I'll take that profit, and then it just keeps on going. It's like,
Yep, exactly. That's why you gotta understand the network effect, baby. Right? Like people make fun of it, but that's because they don't understand it. Like that loser that was in the chat
I
earlier, right?
bought Ethereum at $19. When did I sell it? 49, because it's 2.5 times the money. It's like, yeah, I did well.
Right. And where did it end up? Where did it end up at?
Fuck, 1,450 or something.
There you go. There you go.
Like 6 months later, something crazy. Oh man.
Man, shit is crazy, bro. And this is what people don't understand about Hex, man. Or not necessarily Hex, but just crypto in general. Crypto, and I like to say this all the time, it's a 24/7 market, and that's why it's always going to outperform everything else, right? Like this is why casinos are so filthy. They're taking your money 24/7, right? Like it's a no-brainer. When you can make profit 24/7, you're going to be so profitable that it makes no sense. It makes no sense, right? Like that's how crazy it is. So what we're going to do now, guys, is we're going to get into the expiring shares chart. And like always, I'm going to scroll through them slowly. And I'm going back about 10 days at this point. And I have a couple of snapshots of the shares over those points in time. Now, this one is black. I don't know why. It's annoying me because it wasn't like that before. But the good thing is that I can still point out the highlighted areas, even though they're black. So while they might not be easy to see, I will point them out. And hopefully you guys can see them. But I am sorry about that because I know the white was much more convenient to see. I will try to see if I can get that rectified before I actually post a link to the video and the charts in a tweet after. So I'll try to do that for you guys beforehand. So please just bear with me. But this is useful information for everybody. Trust me, because most people watching this are stakers for sure. And you're going to want to know this. Excuse me, guys.
It's the pulse chart.
Basically, yeah, this is the pulse chart, right? To a certain degree, that's correct. Because what the expiring shares are the future indication of what's going to happen to price, right? And that's what's important to understand. And that's why I'd like to dedicate time to these charts and talk about them because they're very important. They're probably the most important charts in this set with respect to the future. Because the majority of the charts that I show are showing you what already happened. And we already know what already happened. The only cool thing about the majority of my charts is the first one shows you the future, right? Like that one really does show you the future. Whether you want to believe it or not is on you. But that is Hex. That's the nature of Hex. And that's what it's going to be. That can never change. Like, period. So this is telling you the future in detail, right? But what is that detail? That detail is essentially, well, what's going to happen to the T-share rate at X point in time, right? Along the curve, right? And after that, well, what's going to happen if I stake here, or not stake here, but end stake here, or there, or here, or there, right? Like this chart tells you a lot of information. And it depends on how you want to view it as far as how you want to analyze it, right? Because that's the thing.
33 is the sweet spot. You know
that's what it looks like, right?
Yeah.
But here's the thing. What happens if all of a sudden, now this is going to sound crazy because I know it sounds crazy because it does to me, but you got to understand the reality of the market, right? Like there is no yield. These insurance companies are starving for yield and they're buying, you know, shit tons of paper that are trash that they're never going to get their money back on because they're holding it for 30 years or whatever the case is, right? Like you have all these insurance companies doing that. You have pension funds doing that. You have all these entities buying this worthless paper. Like that's really going on. It's very important. Like once a pension fund starts buying crypto assets, guys.
I think they already started, like University of North Carolina, right? Because that's
I don't know. Is that right? I don't really follow crypto, bro. I don't know.
Because I think that's like Morgan Creek's, like Alamala, whatever.
Oh, yo, I used to talk to that guy back in the day.
Really?
Yeah. That tall, slim white guy, right? I can't remember his name now.
Marquisco, right?
Yes, that guy. Yes, he would write these long ass quarterly letters that were like books.
I like his streams. He's a smart fella. I like him.
Yeah. He's a smart dude. He was all aboard the digital asset train as soon as it hit.
Yeah.
So you're right. If any pension fund is invested with him, they're definitely in crypto. Period. Forget about it.
So he's got the, I don't know what you guys call it, the university, basically fund manager, right?
Endowment fund manager.
Yeah.
Call it endowment fund over here.
Yeah, I think he's got that integrated.
So endowment funds are they used to be like, I used to work in the type of business where endowment funds were my clients, cities, all of these entities, all of these so-called official entities with retirement plans or pension plans. They were my clients, and what my company would do was we would help them administer those assets. Now, what does that mean? What that means is we would help them set up their investments, how their investments were going to be broken down, like how they were going to allocate, right? We would help them with their portfolio structure, right? All of these things we would help them with, because the people that are actually managing your assets don't know dick, and that's what people don't know. But the funny thing about that is that I keep hearing people bringing up the so-called liquidity issue in Hex. There's a lot of fear that they can't get out. I love to answer that question, and I will shortly. So what was I saying?
They don't know dick.
Oh, right. But here's the thing, because it's important to understand why I say that, right? Because you guys know I always come back to with the backup, right? Like it's cool to talk shit, but it's not cool to talk shit and not back it up, right? And I always, no, you don't gotta be sorry, brother. You don't gotta be sorry at all. It's all good. Any question is welcome. Any question is welcome. Wait, I'm too broke to unstake and restake. Someone needs to run a scan on HEX.VISION to show stake. You know what? That's true. I think there's a function on backuphex.com where you can run good accounting on old stakes. I just don't know exactly how it works, but long story short, it increases the payout for everybody. I just need to figure that out, because I would do it if I knew how to do it. I would do it. I just haven't had the time. Because imagine that's a way we can boost our own payout. Like, that's cool, right? I don't know like how that works, but I'm gonna try to figure it out, because that's a cool way.
What are you trying to say? Like ending someone else's stakes?
Yeah.
Oh, good accounting? Yeah.
Right. Yeah. It's like just doing good accounting, because so here's the thing, when there are shares in the pool, they're fucking up the count. They're fucking up the count. Like, we're getting shorted, right? And that's why over time, after 2 weeks, the system starts reducing the payout.
Yeah, once Pulse gets up and going, those will be cleared out.
Right. After 14 days, the system starts reducing your interest or your capital or everything, your total payout by 1%. I think it is. I don't remember exactly, but it starts reducing your payout by 1%. I think it's a week. So you have like 2 years or some crazy shit to actually get out.
Actually, it gives you a chance to actually come out with a good profit.
Right. So here's the thing, right? Here's why good accounting, or here's why not being able to unstake right now is okay.
Not a big deal. It's not a big deal.
What happens if you have a 500 hex stake and that shit goes up to and hex goes up to $10 for real? You automatically have $5,000.
Bang.
How expensive do you think? I think you would pay that 50 to get that 5,000 out if need be, right? So that's, and then again, we're just talking about principle here. We're not even talking about interest. Again, whales will always give you the worst case scenario off the rip, because you're always gonna win with Hex, man. Like,
even
you gotta,
like when people worry, just put out the worst case scenario And it ain't that bad, really, because it never is.
It never is.
You know what
It
I'm saying?
never is. It never is. That's the thing. Even when we're even in legacy finance, right? Like legacy finance is well known for people that are always calling for doom and gloom.
Yeah, I fucking hate those guys.
Yeah, I mean, you got to understand, right? You got to understand why that's happening. But you know what? Let me go into this. Let's talk about it. Okay, so we're gonna start with the first couple years just to go over how the whales are staking short because that's important for people to understand. Now look, we're starting at the 23rd of March, right? And we're gonna go from the 23rd to the 29th. Notice how the length of the stakes where the highlighted cursor is going almost a third of that circle from the 23rd to the 26th, right? That's pretty significant, right? It's significant enough to the point where the importance of the stakes that happened prior to are diminished. If you look at these bars across the line, right, across this funnel, when you go from the 23rd to the 26th, the highlighted notation actually dissipates. It's no longer there. They retract to just regular bars. But once you get out to the 22 to 23 year area, 2022, 2023 year area, you see that the stakes also increase here again, right? And I'm going to move my cursor to the edge of the biggest stake along that path. And boom, right? It also increases, right?
Yeah.
The magnitude is increasing, right? Now, I'm going to go all the way to the second now. But from the 23rd, okay? Boom. Look at where that highlighted cursor is at. Okay, 23rd. 29th, it goes in the third of the circle. Then as of this morning or today, right before I started the stream, is 2/3 of the way into this circle. Major short stakes hitting the market. I.e., this shit is going to fucking fly. Because here's the thing.
Wow, it's coming clear to me now. Yeah.
You see it.
Yeah.
Because I've been watching, and what the whales are doing is they're doing 30-day stakes.
Yeah, you see that on the Whalebot. Yeah,
that's right. That's how I watch it. The Whalebot. There's no other way for me to watch it. I'm too busy. So the Whalebot be hooking it up, giving us all that pertinent information, right? And if it wouldn't have been for the Whalebot, I wouldn't have had a clue. And look at that. This is crazy because this is going to really ratchet that T-share rate up. And this is going to definitely put us well on our way to 18,000 Hex a T-share. We just started 17,000 last month. And I think it was like the end of February. We're already at 17,200 already. That's pretty fucking fast.
So 1,000 on the share, it doesn't sound like much, but it's like $17, $18, right?
Yeah, and that's the thing. It cost us in fiat to get those Hex. It doesn't cost us Hex to get those Hex.
Yeah.
All right. So this is why I harp on this. It's important to understand all of the math behind this because in reality, it's a three-legged situation, right? We have to concern ourselves with the fiat aspect of this equation more than the rest of it because that's what we have to transact in. We don't transact in anything else. We transact in fiat. So if we know we have to fight that battle of fiat versus time in order to acquire something of value, it's important to understand what's happening within that system from which you're trying to extract value. Very important. That's why I harp on this shit. That's why I'm spending all this time on this chart because it's important to understand what's happening in the system because it's about to get more expensive to stake. So while these whales are clearly making it more expensive for us, they're also pricing out the competition, right? So it's kind of like a little bit of game theory that they're doing over here. So, you have to understand that also. Like, it prices us out to a certain extent, but not really, right? Because if you max out your stakes, then you're going to get a pretty nice, sizable quantity of T-shares regardless. Because here's the thing. even though the T-share rate goes up over time, one thing that I have noticed is that my T-shares, when I do go to stake 555, haven't really changed that much, right? But that's because I'm staking the max. I don't know exactly what's happening on the short side, but I'm guessing that you're losing T-shares a little bit more there than you are versus the long end of the time curve. So that's just something to understand. But I just wanted to highlight this, right? Like that's pretty major, man. Like over 10, 12 days, like you had that, like that's pretty fucking crazy. Now let's go down here to the next highlighted area. Let's start here. Stays pretty steady, but you do have more stakes coming in behind this big wall right here. So that's what I noticed right now. Oops, sorry. Doesn't really show like as much, but they stay highlighted. So there is some effect there. It's probably just not enough to move the bars out. Let's see what we got here. Oops, sorry guys. Yeah, same scenario for the most part. They just stay highlighted. But as you guys can see, there's more activity in this mid-range from the 23rd to the 26th. Because here's the thing, on the 29th, anytime these bars stay highlighted, what that means is that the rate of change is positive. So there is some additional staking going on here. Same deal, no staking going on here, no new staking versus the previous time frame, right? But you see here more highlighted, right?
I think we forget how amazing it is to like hard lock your money for 15 freaking years, or 10 years even, or even like 5 years. That's just, imagine like walking into a bank and like opening up a CD, and for like, you got the choice like 1, 2, 3, 4, 5 years, right? And most people do 2 years, 1 year. They don't do the max.
No.
You know? They don't do it.
No. You know, that's a great point, because I would love to, you know, that's the funny thing. It's hard to find data on the CD market. It's very, very difficult. I don't think there is any centralized data on the CD market, because I tried to look for some. I couldn't find any. If there is any, you probably got to pay for it, if there is any. Because that's really proprietary data, right? Most of these banks aren't going to want to provide what their rate is unless they want to market it to you.
It was competitive, right?
Right. So I think that's why you can't find that. But whatever, we're good, bro. We get like that's the crazy thing, right? And that's what's funny though. Like it's kind of funny you make that point, because that's very, very important. Nobody really does a max, and here we are doing the max like it's nothing.
15 years in crypto, like yeah, man, let's do it.
It's nothing. It's crazy.
Yeah.
Let's see. It seems as though it's better to buy Hex with fiat rather than ETH, because value of dollar is downward versus the potential of ETH. No, not necessarily, because what if you buy ETH and you can't buy Hex at that time, and ETH goes up in value? You end up getting more Hex for that ETH. And then what happens if Hex goes down at the same time too? You get more Hex than you thought you were normally going to get with that ETH.
Yeah, holding a couple of ETH is totally cool.
Yeah, it's totally cool. Yeah, because that's always going to go up against fiat. So I wouldn't necessarily say that. What I mean to say, in case you misunderstood me, Kilo, is that you have to understand the fiat side of the equation, because that's what you have to pay crypto in, right? Like you're not really paying for crypto in ETH. You're really paying for crypto in fiat. The question is, how are you going to get to the crypto you're trying to get, right? And whether you go through USDC or ETH is on you, but those are your options, right? And the ultimate goal is always Hex, because we want to make money every day. And that's really the whole point, right? You don't want to keep your money in fiat. You definitely want to keep it in crypto. Now, whether it's long-term or short-term, right? Like you definitely want to have your money in Hex, because the best returns are going to be there regardless, whether you stake or not.
I think that's the biggest thing Bitcoin has done, though, as like kind of like awaken a lot of people to like how bad the old system is. Because like people never used to even question it. They just assume, you know, the money you used to get from the government, that was money. The pounds, the dollars, the euros, whatever, lira, the rest is gone. But like that was the only money that people even knew of. Like, but Bitcoin has enlightened like a shit ton of people. Like even just regular normies know Bitcoin now. It's just
Yep.
it's you know
Mhm.
it's
Oh,
amazing things.
you're right.
11 years? Come on, man. That's amazing.
Imagine what Hex is gonna do in 15 when it creates all of these fucking millionaires and billionaires, because it's gonna happen.
Yeah.
It's already done millionaires. Billionaires are next. This is what people don't understand. In 1 year, it's already minted many millionaires.
One's on stream right now.
There you go. There you go. Case in point. So we all know this wall exists, right? And we all know once these are the majority of people's stakes, like OG T shares are here. Like a shit ton of Genesis T shares are here. And when these bad boys hit, man, that T share rate is gonna fucking fly. Fucking fly. So yeah. You just be ready for that. T-shirt master says, "I hate holding ETH because I always want to spend it on Hex." I mean, that's the whole point, though. You know, don't blame you. Don't blame you at all, brother. That's the whole point, for real. So this chart is the all-time Hex versus Ethereum correlation, and the next chart is the all-time Hex versus Bitcoin correlation as of today's date for both. And as I always like to highlight, Hex returns are on the x-axis for both, and the Bitcoin and Ethereum returns are on the y-axis on both charts respectively. Now, as always, you want to be on the right side of your return axes, right? You want your returns to be positive. And for the x-axis, that is being on the right side. On the y-axis, that is being above zero, so that's being on the top side of the quadrant, right? So point is, if you see anything over here, no bueno, right? Anything over here is negative for both. Anything over here is positive for Ethereum, negative for Hex. Anything over here is positive for both. Anything over here is just positive for Hex. Now, if you sit here and look at this picture, and let's say, let me see, I can't remove the line right now, but imagine that this trend line wasn't here. Where do you think the majority of the dots are? Upper quadrant, lower quadrant, on the right side. Now, in math, this is 1, 2, 3, 4. So quadrants 1 and 2 are typically where you're going to find the majority of your crypto returns. But here's the thing.
Look at the highest hex is like 175%, right? Look at the highest ETH is like 44.
Love it. Love it. Now this is its inception for Hex, right? I'm not recording all of the Ethereum returns, just since inception for Hex. So let me make that clear. Projects come out of Hex. No projects are coming out of Hex. Just finished products. Just finished products, brother.
Well, I just want to say though, because like in Bitcoin, like all the gains happen in what 10, 12 days, trading days a year out of 365. How many of plus hundreds in Hex?
So I just broke down, right, like where the majority of the returns should be, right, and they should really be up here for both instruments to look good, right? Like the more dots there are down here,
we're down to the right.
Yeah, we're down. So if Hex is outperforming,
yeah.
If Hex is outperforming the instrument significantly, the majority of the dots are going to be here.
Yeah.
If so, and that's what we're seeing on. At least that's what I think we're seeing.
You want that magenta line pointing down,
huh?
You want that magenta line trending down,
right?
Like it is,
basically. Yeah.
And this is,
I mean, here it's negligible, right? Like it's basically flat because the slope is 0 and the correlation is negative. Whatever that number is, but it's really just 0. So this is entirely decorrelated. That's why the spread is so less tight, right? It's so less tighter. It's more spread out. Whereas here it's tightly grouped. But yeah.
Which makes sense because we're not trading against BTC. We're
Correct.
trading on ETH.
Exactly.
Yeah.
Right. But the cool thing is that, you know, Hex is really just looking better than both of them, because if an institution comes here and they look at this chart, they're gonna notice that Hex is
Well,
really
on the right side, yeah.
so it
Pretty much.
becomes a no-brainer, right? They're gonna pick the obvious winner, and this chart makes it obvious because
It just needs more dots. That's all it does. It just needs time putting those dots up. Yeah.
yep. Well, here so far we have 474 dots here.
Imagine when it's 1,000.
You know, I really need to get on my Python because I'll be able to do so much. Because I know the scripting, I just don't know how to like get it there, but I'll get it there. You know, coding's a pain in the ass. Yeah, but this shit here, man, this is like a dream chart, dude. Like any institution that looks at this shit, and yeah, the more data points it has, the better. But when they look at this shit, they're gonna cream their pants, and that's just a fact. This is a fact, bro. This is a fact. This is a fact. When I recorded this price, it was 1.667 cents, as you guys noted earlier, for the 10,000 hex. And what this is a hex price, payout per T share, and the adjusted hex price is the sum of the two. Now, let me explain. The adjusted hex price is essentially the future value of hex in reality, right? Because if you look at this, hex was already, if you were staked, right, with one T-share from day one, you were getting this value the whole time, right? So your portfolio was worth that, right? So that's important to understand. Now, when you sum up the value of one hex, because here's the thing, we know fiat is worthless. We know Bitcoin is worth more than fiat. We know Ethereum is worth more than fiat. But what's crazy is we all know Hex is better than both of them, right? Like it actually has a value proposition. It actually has a rate mechanism. It has a value proposition. Like that's the most important thing, because what that means is that when somebody comes and looking for something of value, i.e., somewhere to store their value, and you know, a lot of guys like using that term, but they don't actually know what that means. Because if they did, they wouldn't be pumping trillions into fucking Bitcoin. Just saying. So over time, this value has just been accruing to the staker class, right? So it is just separating itself away from Hex. In reality, this is what you would call the spread, right? This is really what that is. This is a spread between the price of Hex now and the future value of Hex, which is that yellow line. That's what that really is, right? And we were basically at 1 cent last year in May, April. A year later, we're at 2 cents. Now, where were we last year when we hit 2 cents? May, basically. Early May, we hit 2 cents last year in terms of future value, right? So let's say a year from now, we hit 11 cents. I don't think anybody would be mad at that. I know I wouldn't be, even though I'm calling for $10, because guess what? I'm just going to keep buying. So, like, it literally doesn't matter. Like, I hope I'm wrong, because what that means is people don't find out about it and all that crazy shit. So that would be great. I'm not complaining. So, because again, guys, we're buying Hex to stake it and print money because we want our balance sheets to be swole. And as we all know, our net worth is our value in real life. Like you can have all the titles you want. You can have all the PhDs you want. But if your ass is broke, you're going to have problems in life. And you're not going to be able to resolve them if you don't have any assets to collateralize. And that's the thing. You have to understand that. You have to understand that. You have to understand how money works. You have to understand how economics works. If you want to have a good, comfortable life, you don't want to be like the people that win the lotto and then go broke. You have to learn these things. They're just not optional. Trust me. I already been through that shit. You don't want to come into money and then just let it blow off into the wind, because that's what happens. Straight up. So the payout per T-share line is giving you the dollar value of the payout per T-share for every day that a T-share payout has happened, right? So if you got one T-share you receive 9.6 cents in hex value on 4/1/2021, April 1st, 2021, 0000 UTC. That's what this means. And as of the recording of this price, that gave you a future value of 11 cents in hex. So then the question becomes, because the interesting thing is, right, like we have to take into account, and let's just get the PE thing out of the way. Hex PE is, so, you know, I need to put a little trend line on here because it's something that I'm noticing that I know is subtle, not obvious.
It's slightly curving up.
Yeah,
right?
exactly. Slightly going up. Now,
Yeah, that's interesting.
what does that mean? That means that the payout is going down because your earnings are going down. Now, this is a ratio. The price is going up, your earnings are going down. That's how the system works. Because you have to remember it's a balancing act, right? Bond math is a balancing act. So if the price of one hex is going up, that hex payout is a dollar value now, right? That hex payout, i.e.
increased demand, right?
Correct.
Like a curve up.
Correct.
Yeah.
When that hex payout is going down in hex value, meaning less hex being paid out per T-share, like it's been lately, like we were getting 5.8 for a long time, right? Like the average was 5.8 for a very long time. Then all of a sudden, once those big stakes came out and these new whales started coming in, like the payout has gone down.
Yeah.
There's a lot of new, I don't know what's going on, but there's new whales in Hex. I don't know if people have noticed. And a lot of these short stakes are them. I don't know, you know, exactly who, what, where, when, and why, but there's big money staking short, and I had never seen them before.
Well, that makes sense, you know, to test out the system before you like,
right?
You know, that's cool. That's cool to see.
It could very well be that. It could very well be that. I'm not entirely sure. It could very well be that. But this is just what I want to explain, right? Like if the payout is going down, like you just said, demand is going up. But remember, this is essentially one hex divided by the T-share payout, right? Because what you guys have to remember, even though I'm taking the dollar value of hex and dividing it by the T-share payout, it's payout per T-share, right? So if I take out that, if I was to do, for example, T-share divided by the dollar value of a T-share payout, that number would make no sense. Why? Because it would be like some $4 figure, some 4-figure number, which doesn't make sense because clearly there's more value than that in the system when you're getting 40% APY. So that can't be true, right? So given that fiat is irrelevant, what we want to do is look at it in terms of hex, right? So we take one hex divided by the payout, right? But since we're ignoring the dollar value of the T-share, and we take into account that T-share is really just one, it cancels itself out, right? So it's really 1 divided by that payout in hex. So it's 1 over 5.704 or whatever that number was. Let's see here. 5.746. So there you go. So 1 hex divided by 5.746 gives you this number. But the thing I want to highlight is that with the payout going down in hex terms for now, because we have to remember the T-share rate ratchets up, right? So while the price is going up, the dollar value of that price, 1 hex is still 1 hex, but that payout is going to go down during these periods, right? Because demand is going to offset that T-share rate at that point in time, because the T-share rate is ever moving. It doesn't stop going up. So just because your payout goes down for now doesn't mean it stays down. Very important to understand that, because T-share rate is deflationary by default, giving the system constant value over time. And this is how we're able to monetize time. This is why Hex beats everything else without trying. It's a beautiful thing. So try to understand that. If you have questions, definitely send them my way, because I'm trying to get to the point where I make these videos as simple as possible. I try to get my explanations across in the simplest way, because it's important that whoever watches these videos understands what I'm saying. I don't want to sound like some type of genius, because I honestly don't think I am one. I'm really trying to explain this in the plainest English possible. So please let me know if I'm being too convoluted or anything like that. I had a nice comment in one of my most recent videos letting me know that I wasn't explaining ROI or APY, and I hadn't even realized that. Right? Of course, the person could have went and Googled it, but that's beside the point. If they're watching my video, I should provide that information so they don't have to wonder. So I just also need to do a better job of explaining certain things. So for real, definitely let me know, because I want this to be as good for everybody that comes across and finds this, not just the people that were here when I started doing this, because we already know what time it is, but somebody that's new might not. So definitely let me know that, guys. Would greatly appreciate that. So yeah, let's get back to this. So this is crazy, right? Because I thought about this randomly because you kept asking me about this shit. To be honest, right? Like, this is your chart, in fact, because I would have never thought of doing this, because I wasn't even trying to do anything more. Like, I keep adding charts to this shit, and I stopped because, like, there's so many different ways to look at Hex, right?
Before you came on the scene, this is what I was trying to do myself, and I failed miserably. Yeah.
It's just a lot of time and practice, man. When I stepped into Wall Street, I had to do shit like this from the start, because back then, you didn't have all these scripting languages that you have now. Like, JavaScript didn't work like it does now, so I didn't have to know it back then. VBA wasn't easy to use back then. Like, all of these things that exist now were non-existent. So this is why I can whip this crap up in Excel. Like, I'm a unique person. There's not a lot of people walking around like me, because everybody like moved on, and I just never did. Because I left the game. I left the game. I didn't, I left the buy side. It was a waste of my time, because there's nothing to do if all you gotta do is buy stocks because it's just gonna go up. What was it to do?
Yeah.
Right? Like, there was no value investing. Like, who gives a shit? With 1,000 T shares. Hold on. Somebody's saying, Big Boy Garms is saying, apparently Richard tweeted that was 1,000 T shares and Hex at 1 cent. That's 20,000 a year. That's crazy. I've never done that kind of math, to be honest with you guys. I don't feel like I need to, because I just know I'm gonna be paid no matter what. Like, if you want to know how much you're gonna make, good for you. I just rather let the system do what it's gonna do, because this is the thing. No matter what the base case, no matter what number you come up with, at that point in time, the return is actually going to be greater anyway. Like, I don't think people get that. So the shit is crazy.
I mean, look, I posted my March income return stream, and the growth over from March to February is like 40% up.
Look, bro, I had at one time. Look, I'll talk about my T-shirts. I don't care. I got 128 T-shirts now. I had 118 before that. So what that means is my payout is 128 multiplied by the payout per T-share a day. That's my daily payout. It's not a lot, but it's enough, because it's with relation to what I can put into the system. And this is what's so cool about Hex. It literally allows you to determine what you can afford to make. And the added benefit to that is, if you can't come in with $100,000, because I can't, what you can do is come in with something, stake it long term, right? And
Everyone's got $1,000, so we know that because of the bloody stimulus packages.
oh, right, the stimmy, right? But hold on, let's go to this chart that gives us a 10,000 hex. So right now, 10,000 hex is $166. Let's see what it actually is. I'm gonna look at a live price. It's actually $165 with 60 cents. It's $165.60 right now for 10,000 hex. Now, if you stake 10,000 hex, let's see. I happen to have exactly 10,000 liquid in my account for 555. At this point in time, that assures you 1.743 T shares. Right? Not bad at all. One T share is paying you at least 5.5 hex guaranteed. Right? So you can say you're gonna get 5.5 hex for every 10,000 hex that you stake for the max. Now, let's do some math. Okay, let's do some math. 5.5 divided by 10,000. 5.5, 10,000 is percentage-wise 0.055%. Okay, nothing crazy, nothing crazy, nothing crazy at all. But here's what you have to understand, and this is what might be about to fuck your head up right now. That's daily, right? So when you multiply that number by 360 times, that changes things, right? Because then that becomes basically 20%. That's what that basically becomes. Because you're multiplying that 0.55% by every day of the year. And that ultimately becomes 20%. That's what that ultimately becomes. Just do 5 times 360. Or 5.5 times 360. That's going to give you a number close to 20. And that's 20%. Because there's 365 days in the year. Right? So taking that into account, we're going to do something else. Right? Because that's not even the right number. Because let's assume the system is paying 5.5x average, right? Long term. Let's assume that's a long term average because we don't actually know. If you're getting 1.74 T shares for 10,000 hex, that means that you're getting 9.5 hex a day in reality, right? So if you're staking for the max, you're getting 1.74 T shares. If you're staking short term, you're getting a third of that. You're not getting that much hex. Let me see. Or that many X and payout. Yeah, you're only getting a quarter of a T share for that. So if you stake, yeah, you're getting, if you stake for 30 days for 10,000 hex, you're getting 0.6 T share. If you stake for 300 days, you're getting 0.67 T share. If you stake for a year, 0.7 T shares. So if you stake for, let's say, 2 years, what's that? 720. That's 0.8 T shares. You see, so the further out you go, let's say you do half of a decade, that's 1.16 T shares. If you do the max, which is 3641 days, that maxes you out at 1.7 T shares, 1.743 T shares, right? So that takes you up to 9.58 shares on average. And what that ends up becoming in percentage terms on a daily basis is 0.1, well, really 0.959%. Now, when you carry that out day over day throughout the year, that APY, that annual percentage yield, becomes 35%. So you're generating 35% in hex terms, but what you have to take into account is what happens when that 10,000 hex is now worth 297 hex. Because over time, that's what the T-share rate is telling you. Because here's a crazy thing. You're getting paid in hex every day. And what doesn't change in value is the dollars that you're using to buy this hex. What does change in value is the hex that you're buying. And typically, as you can tell by this chart, it's always up, never down. So it's very important to understand that. Even if you come in with a small stake because you're new, you're not doing yourself any damage. You're actually doing something great for yourself, right? So it's important to understand that, like, there is power in T-shares. There's power in understanding T-shares. There's power in trying to understand T-shares. Until I understood them, I didn't get it. And everybody has to go through that process. So please try to understand them. Understand that the longer you stake, the more T-shares you get, regardless of the size of your bag, right? Like if you come in with a 5,000 hex stake, you're still going to get I think you're getting 0.87 T shares for 5,000 Hex, right? But here's the thing. Let's do some math. 5,000 Hex, 0.871. Guess what, guys? That rate, that annual percentage yield doesn't change. It's still 35%. The daily APY is still the same. So you see, the system is there to pay you, regardless of the economic value or economic mass that you bring. So this is important to understand. This is why I'm going through this. You know, these numbers are real. You can go check them right now on go.hex.com. I'm not showing my Excel because I'm tired of having to go back through the videos and remove my name because Excel sucks now. They want you to show everything. So that's why I'm not showing my Excel anymore. But the rates of return are real. All you have to do is divide the daily payout in Hex, which would be the T-share rate multiplied by the number of T-shares, and I'm using a 5.5 Hex per T-share payout value, which is lower than what we're actually getting. So this number is actually wrong. It's actually higher than 35%. So, you know, no matter how we break Hex down, it just beats everything always.
So the T-share rate equates to our Bitcoin mining hash rate.
That's right. That's exactly why I came up with this graphic, because this is exactly what this is showing. The longer you're in the system, the more you're going to make, because the difficulty goes up over time.
It always goes up, yeah.
Yeah, the difficulty to earn will always go up. And that's why now...
No dips.
Was that? Oh, yeah, no dips. No, there's no dips. That's true. Because here's the thing, right? Like now, you don't have regular people mining Bitcoin from their CPUs. What you have are these gargantuan entities mining, right? Like you have countries, you know, companies that are literally built just to mine Bitcoin, right? And depending how much hash rate they get, I mean, they're not making money. They're just thinking that they're making for Bitcoin, but it's costing them out the ass, unless they have a major, you know, they're able to steal electricity, basically. Like that's the only way.
Yeah.
I mean, how profitable can it be to buy a whole bunch of hardware and pay to use it?
Yeah, like the kilowatt rate is like 8-9 grand per block or something. It's crazy. Yeah,
exactly. It's not really a super profit endeavor. Like it's crazy.
Yeah, I remember John McAfee getting into Bitcoin mining, and after 6 months, he's like, "This shit sucks."
Yeah, it's dumb. It's dumb.
He's a smart guy. He's like, this shit sucks.
Yeah. So here's something cool. I didn't know this. Crypto Model T Maximalist notes: 5.7 Hex per T-share is the lowest rate we've been paid since Big Payday. That's crazy. Good morning, Mixed Exquisite. Welcome aboard. I had no idea that was the lowest, but he's right. Yeah, because I don't think it's ever been that low. Hold on, I got that chart in here somewhere. 5.704 was here, and that is the lowest. Yeah, wow.
It's basically flat.
Yeah. It's basically flat, but that's the lowest point on that line. Like if you put a ruler across this, it never touched 5.7 before. And that's what's interesting, because that's a true sign of demand. I mean, we didn't double for no reason, right?
Yeah, of course not.
So let's talk about that. We doubled from basically day 123, or maybe even day 117 or so, to now. Let me. Do I have my? Oops, sorry. Let me see if I have my spreadsheet open. No, I sure don't. Hold on, because I actually want to see something. Because you guys know I always make these crazy ass findings midstream. So give me a second. All right, let me see something here. Because Hex is just a fucking beast, man. Jeez. Let me see something here. Where are you? Yeah, here we
Look
go.
at total T-shares. Look at that, 11 million.
Yeah, it's 11 million. It keeps going up. It hasn't stopped going up since it crossed 11 million 2-3 days ago. And what I'm
Yeah.
trying to do right now is I'm trying to see when the hex payout topped out, which it looks like it's day 111 or something like that.
Hmm.
Hold on, I'm in the wrong damn tab, fucker. Um, 5.76, because I'm not trying to count the days with payout spikes, right, due to
Yeah.
penalties and stuff. Because what I'm trying to account for is demand, right? I'm trying to take a look at what demand we have with respect to the hex payout. Like that's what I'm trying to look at here. So let's see. It was after that 5.91. That was the day.
Can the yellow line ever cross the pink line? Can the daily payout ever go above?
I don't think so. No, it shouldn't. It shouldn't
Oh,
because
yeah.
it's with respect to that.
Yeah, okay.
Because the daily payout is the whole system, and the payout per T-share is what you get per T-share.
Yeah.
So it should never. They should never cross. It should actually always be the same. Let me see here. Yeah, I think. Let me just look at one more thing. Yeah, you know what's funny? This is funny. Because when we think of hex price, it's hard for people to relate it to 16 bars. It's very hard for people to relate it to, what the system does with respect to interest. But it looks like there's a relation for real. Like it is, what people say it is. Now let me get to this. 16 was the bar count. Yep. Okay, so I was right. Um, so we're at day 130. Oh, okay. So I'm counting the days after big payday. So this is a little off. So when we go back 16 days, this max here is like 138. And if we go back about 10 days, right? That's like right here. And that's like right here, right? Like this is a start. So what I want to highlight is the fact that prices doubled in Hex due to demand, not just random happenings, right? Like this is a little different than it was at the end of the year. Like this is people buying in and staking Hex and then ending stakes and then restaking Hex, right? And look at how slightly down the payout is. So this is to answer all questions really in relation to payout changes, right? Like we're really not going to see any significant payout changes even after a major price run. Like that's crazy. I don't know if you guys can grasp how crazy that is, but we just had 100% basically price move, more than 100%. Hex went from 0.8 to 2 cents basically. So that's 1.1 cents hands down. So that's a greater than 100% move, not only in your staked Hex, but also in your interest. It's crazy. So it's very important to understand the power of what you own, because that's really all I'm trying to highlight. This is powerful because what is it like? How realistically lower can the T-share can the payout per T-share go? Because the system is designed to increase its payout over time, and is designed to always reward those that have always been here, right? So the payout per T-share is not going to go up to such a significant clip that is going to be crazy. Or I'm sorry, go down at such a significant clip that is going to be crazy. But if it ever does, it would be interesting to see how that happens, because I just can't imagine it. Like you would have to expect the total T-shares to go like, parabolic like it did here before big payday, right? Because that's when the payout per T-share reduced to 1 again, right? And we can see it here on this chart because the index dropped, but that's because the staking went up, right? So that's important to understand also, because it's a mechanism. It doesn't just happen by happenstance. Let's see. Yep, that's right. So Crypto T model, I mean, that's a crazy name. Crypto T model, maximalist. Hold on, where's this thing? It says all of this, which is important because it's all true. Ending stakes ratchets the whole contract forward, meaning it mints new hex, which raises our daily payout, and it burns T shares, which reduces competition. That meaning it raises the share price, i.e., the barrier to entry, right? And that's true because that's exactly how the mechanism works. And that's on the back end, right? That's on the back end of it. So it's just important to understand all these fundamentals that exist. But I think I'm gonna end it here, guys. You know, talked about Bitcoin, talked about Ethereum. Let's see what they're currently doing right now. In fact, before we hop off, yeah, still just hanging up there. So just keep an eye on it. Be aware of what it's doing. I mean, this shit looks crazy. When you look at it like that, it just looks crazy. Jesus Christ. It just looks crazy.
Yeah, it's crazy, but I think all this right now, the action it's a running consolidation. It's going higher, dude.
It probably is. It probably is, but it's important. It's important to be aware of what's going on.
Just look at the sentiment out there. It's not even frantic. Like I gotta get in right now. It's not. It doesn't feel like that. It feels like steady accumulation.
I guess. I mean, it felt like that a month ago.
Yeah.
That's the thing. It felt like that a month ago. So all those people that bought in a month ago are waiting for this shit to go up. Question is it going to? I don't know.
Yeah, I don't know. But like, when did Elon get in or announce he got in? It was like 50 grand, I think. So I think the bar, the floor, is way up there. It's not going down to like 28. I don't think it's up there, dude.
Yeah, I don't know. I mean, look, if anything, it probably won't go past 30. Right, like that's my worst case scenario. If it does,
I think if it does that, then it's like people like fuck this shit. It's gone down 50%. It's over. I can't see that happening, dude.
Yeah, I don't see it either. But like I said at the start,
it's possible. It's possible.
Like I said, yes.
Anything it wants. Yeah.
Yeah, I mean that's the thing, right? Like it can do whatever it wants, just like you said. But like I said at the start, like I'm a believer of the stock to flow model. Like I get that, So I expect it to go to 100,000 this year, not next year. So the question is it gonna get people to sell here? Because there are people that were selling like crazy over here. There are people selling like crazy here too.
So if you got down in 8-9 grand, of course, why not?
Right. I mean, yeah, I get it. There's plenty of people that bought. Back here, and they're like, "Fuck this! I'm cashing out some now."
It's the people selling who they're selling to, and who's buying that.
Correct. That's right. That's right. That's right.
It's a small fish handing their precious BTC to billionaires, then this is a different game we're talking about now.
Yes, sir. That's right. But it's important to talk about it, right? And that's the whole thing. It's important to talk about it because that's the thing. You have to keep a pliable mind when it comes to markets. You can't think, okay, this is what's going to happen and that's it. Nah, it's important to have your biases, sure, but you have to understand that the market does what it wants. So no matter what I say, I understand that. So make sure you do, right? Like I might say one thing, but it doesn't mean shit because the market does what it wants and I'm going to react to that market. So, be aware, do your own research as always. Got questions, I'm always available to chat. No, I'm nobody special. But, I just like to highlight what's going on in the markets. Right now, Bitcoin is looking rather weak, especially after being up this high and just going sideways for so long. Like, that's just not a good sign. But important to also remember, a dull market is not a market you want to really bet against either. So, like Hex, you gotta be careful. Earlier
this morning that you retweeted, basically you guys sold you Bitcoin for ETH for Bitcoin.
Right.
Yeah, or it's like 2100 right now.
Yep. Yeah, actually, let's check because I don't actually know. Oof.
It's going.
Damn. Going, gone. That shit is crazy, bro. Got me a little
Maybe ETH is going to pull up Bitcoin, you know?
Yeah. It's definitely going to outperform Bitcoin. Hell yeah.
Yeah,
it's a no-brainer. I mean, look at this chart. Look at this chart. Yeah, this shit's definitely gone, bro. Woo.
Yeah.
Damn.
Yeah.
Well, good thing I own Hex down here. Have fun buying your $1,000 fucking coins, suckers. It's pure math, bro. Real returns.
Graph coin, GRT.
Oh, here's one. Yeah, this is. Look at that.
This shit can do that. Come on now.
Let's talk about that for a second. I know I want to get off, but then this is crazy, bro. Because come on, you're gonna sit here, tell me Hex can't do this?
Nice looking chart, by the way.
Huh?
It's a nice looking chart.
Of course.
Yeah,
of course it is.
It had a big pump on the launch, and they had a nice 60% retrace, and then it was foundation, and then it flew again.
Yeah. And it's probably going to do the same thing again.
Yeah, looks like it.
Yeah, it does. And I mean, and this is just how they move, and this is what people have to understand. So why can't Hex do that?
Oh man. Yeah.
I mean, it's looking like it's about to, but why can't it? Like, that's what I want to know. Like, why do I sound crazy? I don't know. I sure as hell don't look like I sound crazy after looking at that chart, but you never know. So here is Hex versus Ethereum.
I remember people chasing the airdrops,
they sure as hell are chasing airdrops, aren't they?
So that's a big pump momentum right there.
Yes, it is. This is actually pretty cool. So what this is actually doing now, just to explain. So Hex is actually pulling back after a breakout, right? We all know this. But what's important to understand is this is a shakeout move. So once price reaches a certain level, typically, hopefully around here, that's what you want to buy. Same thing is going to happen versus Bitcoin because, again, it's Hex's time now, just like it was back here and just like it was before. So, I mean, it's really just this point here. But same thing here, right? Like, it's just going to break that resistance and it's going to ultimately just zoom higher. It's just how it works. That's why I use these lines because that's how they work. There's no guessing involved. It's just a market structure letting you know about what you're going to do or what price is going to do. So that's what it's all about. And let's look at the dollar, actually. Woo! Damn.
Sweet Dixie.
Yeah. You know, it's funny. I didn't think. I mean, it looks like it could roll over here, so it'll be interesting to watch.
It could.
But
doesn't really matter.
Does it? For us, not really.
Yeah.
Hexagons benefit either way. So if Hex goes up or if the dollar goes up, it's cool. If it doesn't, it's cool. I'll throw it on here real quick just so people can see. Let me put it on a new scale real quick. So yeah, short time span, but you guys get the point. Hex moves up regardless.
Yeah.
So yeah, see, dollar down, Hex up. Hex down, Hex dollar sideways, dollar up, Hex up, dollar down.
Them the audience, what that means when the dollar goes up, there's more demand for dollars, right?
Yeah.
So people, there's plenty of a bear signal, right? People are like, shit, man, let's get back into dollars.
Yeah, I guess that's true. I could highlight that, sure. So let me put something else that's longer term on here, so it can make more sense because that's so short term.
Like market crashes and normally dollar goes up.
Yeah, for sure. Because that's what you're trying to say. That's exactly what you're trying to say.
Yeah.
Let me see if I can use this one instead.
Well, like you said initially, I think it's just a little spike up before the rollover. It looks like to me.
Yeah, it could be. It could very well be.
We'll see though. We'll see what
Yeah,
happens.
we'll see. I mean, that's the thing, right? With markets, it's hard to tell because you really never know.
Guessing.
Yeah, it's always a guess until it's not.
Yeah.
Until it's not, and that's the thing people have to understand. So when the dollar goes down, what that means is that the price of risk assets should be elevating. And when the dollar is going up, that typically means that the price of risk assets are going down. So if HEX is going up and the dollar is going up, that means that HEX is outperforming everything. That's pretty straightforward. If HEX is going down and the dollar is going down, does that happen? Kind of sometimes, sure. Happened here for a little while, but that was actually post big paydays, so I wouldn't even count that, right? Because that's the inflation hitting the system, so it's not really the system in its normal state, if that makes sense. If we look at price here, it looks like they traded inversely for a little bit, the beginning of January, and that was after that run up to 2 cents. But what ultimately happened is that HEX just came back to where it was supposed to be, right? And then it hit support, and then it just basically chopped around until it was time for it to continue to move higher, which is what it looks like it's doing now. And during that time, the dollar kind of bottomed out. At least it looks like it bottomed out. And it's moving higher for now. And it broke out of this downward channel that you see pointed here. Let me get rid of this real quick. Broke out of this downward channel. So as of right now, it looks like risk assets are on the blotter for a down move, but that really hasn't materialized either. So let me just pull this up because I do pay for this data. Like, yeah, that shit broke 4,000 on Friday. So E-mini futures, the stock market, it keeps going up, seemingly with no end in sight. However, you got the Russell 2000 here. This is basically small caps, meaning small American businesses in short. And that's not looking too hot because it's now trending sideways, maybe hitting a distribution pattern unless it's able to do this again or this. Because if this actually becomes a thing or something like that, right, then you might get a move like that again. Like, who knows? But once you get that red, once you get those lines above price, it's never a good sign. And that's the point. I'm sorry, I shouldn't be looking at T-bonds, but this is my baby. All right. So, yeah, this is what the stock market is doing. So it doesn't really look like, the dollar is in demand, does it? Like, it kind of doesn't look like it. But here's what you got to understand about how markets work. Capital flows, right? So what could easily be happening now is that the big boys are getting out, i.e. dollar demand, because they're selling risk assets to unsuspecting investors that are paying the greater price. That being them being the greater fools. That ultimately what that means, right? Because we're looking at the price of risk assets going up, i.e. stocks, Bitcoin, Ethereum at 2100 officially now. 2106 is the high, right? But then we have the dollar kind of bottoming out, it looks like, at least on the daily. But when you scope out to the monthly, maybe not so much. But then again, when you look at the MACD and the RSI, it kind of does look like it. So there's something to watch. I mean, and when you look at the price structure, it looks like it is hitting support again at 88, which is where the market took off last time in 2018. So, just things to be aware of from a macro perspective.
That's roll over if the economy's opening up, and like, what was it said? Like, Bank of America said, like, the GDP forecast 6% or 6.5%.
No, that's a joke, brother. That ain't real. Come on now. They printed too much money, right? So it's gonna be greater than that.
Yeah, it's gonna be like 10%.
Yeah, like they're trying to be modest. They're trying to blow it out of the water.
It's gonna one hot.
Yeah,
white hot.
Yeah, it's gonna be way higher because they printed so much money in 2020 that it's gonna make it look crazy. It's not gonna make any sense to people. They're gonna be like,
Yeah.
"What the hell is this? How is this even possible? Why am I so broke if GDP is so high?" That's what the fuck they're gonna think.
Yeah.
That's what I would think. I don't know.
Yeah.
So it's a little crazy, bro. It's a little crazy. It's a little crazy.
Yeah.
I don't know, man. But yeah, guys, that's what's going on from a macro perspective. You know, keep an eye on the dollar. Capital flows, right? Currency is picked up first when risk assets are sold. So you would see a move like this if this was an actual distribution type move. Um, because this is the big picture on the dollar, right? So something to be aware of. Because what happens if we do get a move like this? And you guys know what happened in 2000, right? If you don't, Google it. I'm not gonna keep going because then this can turn into a whole nother 2-hour stream. But Google it. Google what happened in 2000 because I just explained to you guys what could happen, right? If the dollar starts getting accumulated by the powers that be, i.e., big money, that means they're dumping risk assets on you. Not you per se, but unsuspecting investors that are buying expensively valued assets that they're overpaying for ultimately. And look, it takes a while, right? Like this doesn't happen overnight. So I'm giving you guys a big picture view. Just something to consider. But when you zoom in, right, it looks like the dollar's going to keep going higher. It's at least 94 area.
Yeah. From where it came from, look, 2014, what was it like down in the 80s?
Yeah.
70s.
Yeah. But really high 70s, so really low 80s, right?
So that's the main thrust. The main thrust is up.
I mean, what's kind of crazy when you think about it is just look at the fact that they printed all these dollars, right?
Hasn't done nothing.
And it really hasn't done shit.
No. So they're
Right.
just going to keep doing it.
And
Why
this is
not?
peak to trough. Yeah, it's only really down 13% peak to trough, right?
If you're
So
doubling your supply and it goes down 13%, you're just going to keep on doing it.
yeah.
Why not?
Yeah, that's the thing. Why not? Right? So
If I could, print more Hex t-shirts, I would.
precisely. And that's the thing, right? Like they're clearly getting away with it. The market is letting them. And that's important to understand because we're going to ultimately benefit from all of this. All of these missteps that they're making.
So something's soaking up those dollars then. Something. Something's hoarding it. Some companies are hoarding it or
Whoever, who's
something.
hoarding it. Let me explain how that works. So what happens is that the U.S. lends to third world countries, second world countries, right? And when that happens, they now have debt denominated in dollars, right? So when that happens,
they're fucked.
yeah,
Yeah.
correct, because they keep borrowing in dollars, debasing their own currency, and that's how they end up getting fucked.
Yeah.
Yeah. But all right, guys, leave it here. We'll wrap it up. Thank you guys for chilling and watching. If you guys got any suggestions, anything like that, drop me a line. You can find me at Wales Only One on Twitter, and at t.me/Wales Only on Telegram. What else? My boy Apologies on Twitter. You see the name, you'll find just that. He's not a bot. You guys got any suggestions, anything like that, shoot them my way. You guys know I'm not shy. And as always, thank you for tuning in. Spread the message far and wide. Financial freedom is the way out of everything. Have a good one, guys.
Peace.
Peace.